and then 10 years on Merrill Lynch, one of the most important, powerful trading desks, and certainly the biggest. And I talked to all the big institutions, so the biggest hedge funds, mutual funds, insurance companies, et cetera. And that's where you really learn what's really actually happening in the marketplace, and not just what should happen. Because I know that a lot of different times that we see a difference between the two. And I really learned that you have to, as important as fundamental analysis is, and it is very important, you want to use technical analysis, also things like positioning and sentiment that can be very, very important, especially at key turning points, because that's where you really can maximize your returns. Because one of the things, there's an old saying on Wall Street, the market is always right. That's the worst saying on Wall Street, even though it's the oldest. It's the market is only always right eventually. And I could give you dozens and dozens of examples of that. But of course, the easiest ones are, the market was obviously not right at the top in 2000, and the market obviously wasn't right at the bottom in 2009, or when the market was way oversold and just washed out. And that's when you really make some great returns. And so that's what we really try to do. What I try to do, again, having to combine all these things. And again, I have my newsletter, and a newsletter which has several different tiers to it, and I think many of you are already getting that, some of those anyway. And one of the things, though, I try not to do is not just give picks, but also educate people. And we're going to talk, hopefully I can educate you here today about a couple of different areas and how you can really kind of see those key turning points, and whether they be long-term turning points, the ones that will last many, many months, and some that just will last a few days, but can be very profitable, especially in the options market. So it's not just a picking letter, it's an education letter as well. And the key thing too is we have to see beyond what just Wall Street. I mean, it's such a herd mentality on Wall Street, and they only wait until they're absolutely sure something, a trend has changed before they make that change. They're changing their opinion, and after that, when that happens, a huge part of that move has already taken place. I mean, let's face it. We have I'm sorry, you talk about, some of the greatest players on Wall Street, the biggest traders, greatest investors, they've all made money when there was blood in the streets, when the market was flat on its back and they came in and bought the market, not after it already bounced 30%. And so that's where you really have to look beyond those things. And Warren Buffett became a billionaire buying when everybody thought you should be selling. So that's kind of a key to what I try to do things. And again, I don't stay on this too long, but just say the couple of turning points I've made. A kind of a big, long-term turning points happened this time last year in early September. I talked about the bank stocks. They had to be. It was a great time for them to bounce back. Everybody had, after staying bullish on them for a long time, everybody turned bearish. I just went from the opposite. I went from saying they'd underperform for 2.5 years to saying they would finally outperform, and it worked out really, really well. And even bigger was the energy stocks. About 2 weeks from now, about literally early October of last year, I was pounding the table saying you've got to buy these stocks. Everybody on Wall Street saying it's dead money. Fossil fuels are dead, for whatever. I was pounding the money saying, I don't care if they're going to be dead 20 years from now. They're going to work now. And they've wildly outperformed. And along the way, they've taken a couple of breathers, and we've been able to capture those. And in our chat room, where we talk about the tier 4 chat room, where we're able to say, hey, geez, I like these really long term, but here's a good opportunity to peel back some of your positions here, or even add some puts or some shorts on it, and then then other times we've been able to get back in. I'll show you some examples of that. And then on individual stocks, Viacom last year, I mean, it was one of those meme stocks. Everybody thought the stock rallied 280% in just a very short period of time. Well, this wasn't just AMC. People knew that could come screaming back down. People are saying, well, Viacom's a real company. I looked at its RSI, its relative strength index, and I'll talk about that a little bit more if you'd like, but it got ridiculously overbought. I started pounding the table and said, you got to short this stock or buy puts. 2 days later, those puts had rallied 2,500%. Okay, and some people kept with it, I think, like Rodrigo, and they went up 10,000%. Okay, again, not 100%, not 250, 10,000%. And now, again, those aren't something that happens all the time, but you can get them. And then more recently, NVIDIA, again, the street was saying this is the greatest greatest company in the world. Well, it is still the greatest company in the world, or one of the greatest companies in the world, but the stock had become ridiculously overbought after an 80% rally in just 3 months. I said, you got to sell the stock. You should buy some puts. The stock dropped 14% over the next few days. And those options, the put options moved up 300, 400%, depending on when you bought them and when you sold them. So my point is that when you're making these kind of decisions, some people are just trying to guess. Well, geez, it looks way overbought here, or geez, it looks oversold. Well, you got to have some educated decisions, not just guesses. And this is where some of the things that I look at in the technical analysis become very, very helpful. And as we say, I think today, right now, we are moving to a key turning point in the marketplace. And we're in that September, October timeframe where we tend to see turning points in the market. And it's not just that though. There are a lot of things coming to a head all at once. And I think this is a period where people, again, can make some great, great money at some turning points that will last more than just a few days. We can make some money on the options market over a very short time frame, but even in other ways over several weeks. Again, the stock market is extremely overbought. I'm sorry, the stock market is extremely overvalued. Now, at 22 times earnings and 3 times sales, that is ridiculous. That was the most expensive it's ever been. And you can't fake sales. You can massage earnings, but you can't massage sales. The problem is valuations are a horrible timing tool. The market's been overvalued for a while. The market was overvalued in 1998. It kept going up for 2 more years. But however, we have a situation now where you see where we also have a ridiculous amount of leverage as measured by margin debt. And the thing is, leverage is also a lousy timing tool. In fact, as margin debt is going up, that's bullish for the market because people suddenly have more money to buy stocks, even though it's money they've been loaned, and the stock can continue to go, the market can continue to go higher. But you see what happens in 2010, 2000, 2007, 2018. A lot of people forget the market. We had almost a bear market. It was a 19% correction that year, and it was when when margin debt started to roll over. Well, guess what? We are now at even the biggest crazy levels of margin debt, crazy levels of leverage, and it's starting to roll over. So it's not going to take money. What happens when margin has to be, when leverage has to be unwound? It's margin calls, it's forced selling, and you get bigger declines than you would otherwise get. And like I said, we've talked about a lot, is that we want to be able to not just weather from this, but that we want to profit from it as well. The one thing I'll just say too is that one thing we do in the chat room, which it works really well in this tier 4 chat room, I guess we call it, is to be able to trade around the positions. And as I mentioned, the energy stock, this chart only goes through June, but these are the situations that we were able to take care of. I'm just moving that out over here a little bit. So that happened. I turned bullish right in here. Okay, and here was the technical reason: the relative strength index. Okay, that is something that tells you whether stock is overbought and oversold. It's a relative strength. It gets below 30. Okay, that is a good opportunity to buy. That's certainly what happened over here back in 2020. It was an unbelievable opportunity to buy. I saw it again here. Okay, so I said buy. Okay, I didn't get the right exact bottom, and in fact, it actually made a new bottom, but not much of one. But it started to rally. Okay, again, based on this relative strength index. But then it got up here and I doubled down. Well, why did I double down? Again, technical analysis. I saw a golden cross. The 50-day moving average crossed above the 200-day moving average. So sure enough, it took off from there. It got up here, but look at the RSI, the relative strength index. And the 70 level is a level where you will see when it becomes overbought. You see it got above that level. I said, hey, let's take some profits here and cut back, buy some puts, whether it be on the XOP or the XLE, which are 2 energy stock ETFs, and make some money there, or just pull back, cut back our trim 20% off of our long positions in the individual stocks. Then we got back into it here again when the stock, when the group had become, it hadn't been extremely oversold, but I thought that the 50-day moving average would, provide some nice support. And sure enough, after a quick dip below it, it rallied back up. So this is another thing that we really try to, where we can combine, where we have a nice long-term position, and we have stocks like Chevron and Devon Energy and Capital and Gas, which was a new addition that we were able to get just before natural gas just took off. And then we also were able to get some positions where we bought some puts, bought some calls in here, and really kind of, again, maximized our returns, which we're always looking to do. And here's another one, NVIDIA. Again, I talked about that earlier. The stock, unbelievable stock, but see how overbought it got? And this is another teaching point. Look at the MACD. The MACD is what's called, I can never, it's moving average convergence divergence. I can never remember what it is, so I wrote it down to be sure. But what it is, it's the same thing as a golden cross or a what they call a death cross. But instead of being the 50-day moving average and the 200-day moving average, it's a much more short-term thing. And they use the 9-day average versus the 12-day average. And you can see what happened the last two times, last three times here, it had seen a negative cross. The stock, NVIDIA, even though it's a great company and a good stock, great stock, it sold off both times. So when it got to here, I was like, geez, it's getting overbought. And then it saw a negative MACD cross. And I said, guys, we need to buy some puts in this name. Sure enough, the stock dropped 12% in just a few days. And we made 400%, depending, some being big, 200, again, depending on when they got in and out, but just 5 days later, I'm sorry, I said 4 days, but 5 days later, people were up several 100%. I'm just gonna go one more thing again. I think in this chat room, we talk about Chevron. It's one of my great long-term tier 1 buys. And I love the stock. We got into it last year. Look what happened now. It got down to its 200-day, got down to its 200-day. Remember how I talked about how I said, let's peel back some of our position here? Okay, but when it got back down to its 200-day moving average and it became oversold on its RSI, I said, this is gonna be a great time to buy it. Let's go back to a full holding on the stock and buy some call options. And sure enough, look what happened. The call options 2 days later, we bought them at the end of the day, and July 19th, 2 days later, they were up 330%. And that's when we took some profits on that one, but still kept a long position. I could go on and on here. Netflix, I just want to say one that's more recent, literally in the last couple of weeks. Netflix, you see where its RSI got up into the high 80s. This is just a short-term chart, but in the chat room, I showed a long-term chart to show every single time Netflix got into the high 80s. I don't care what you think about we're going to have more COVID, we're going to have more people are going to buy more Netflix. Didn't matter. The stock is overbought. Didn't care what the fundamentals were. It got so extremely overbought. Sure enough, 7% decline in 7 days, and those put options shot up by several 100%. The last one I just talk about here is Lululemon. Here's a stock where, again, in the chat room, somebody came to me. That's the greatest thing about our chat room is that, I come out with stock picks all the time, but I can't pick 500 stocks every day, and nor would I want to. But people come into on the chat and say, hey, what about this stock? What about that stock? Or what about this ETF? What about the overall market? And I try to give some answers on that, and we can talk about it. But here was one with Lululemon reported this unbelievable earnings, and the stock opened right at its high, right there. And people immediately came and said, Lulu, boy, look at this great stock. Shouldn't I be buying it? And I said, no. The short interest in this stock is very low. It's not a meme stock. It's not one where it's going to open high and keep running because everybody's short. It's going to go open high and do nothing. Sure enough, now I didn't have today. Today it actually closed down on an up day. So you can see that, we didn't make any money on this. I didn't say maybe some people bought puts. I didn't recommend buying puts. I just said, stay away from this one. So I saved some money because they would have lost money if they bought calls on that thing because it was not going to go any higher. And they wouldn't have lost a lot. And if they went long just the common stock, they would have lost some money, not much, but they would have lost some money there. And again, I wasn't saying it's a bad company. It was a good fundamental story, but it had gone too far too fast. So that's really what we wanted to do. And I'm going to go on, again, we could go on and on here, but another one that I like to use, I mentioned RSI, talk about MACD charts. And this is a Bollinger Band chart, which talks about when a stock on a short-term basis gets more than 2 standard deviations above or below its 20-day moving average. Well, sure enough, here it got above, was up there for a couple of days, but it wasn't really overbought yet. So when it got to an extremely overbought level here, I said, hey, let's start looking at some put options. And sure enough, it's seen a 13% decline over the last couple of weeks. In fact, when it saw this rally here, people were asking me, oh, should I get out? I was like, no, that's a sucker's rally. And we profited more on that. So again, that going back and forth provides a great opportunity to, not just to find some one-off situations that come up every once in a while, or really can come up several times a week, but also take advantage of moves in our long-term holdings where we can kind of trade around them and make some extra money. Again, these the put options in Macy's. This is actually because the put options we talked about actually expired. Those ones went up a couple of 100%, but the ones who bought long-term options still doubled their money in just a couple of weeks. But that's really, it kind of gives you an idea of what we try to do, or what I try to do in this in our chat room here. It really works out really well to be able to trade some new positions, because one of the things is it's so much. And we talked about Apple this past week, same thing. It was like, geez, what a great company! They're coming out with a new product, but 74% of the time, the stock trades down, not just on the day of the product announcement, but for several weeks. And sure enough, today it bounced back. It went down yesterday, bounced back a little bit today, but not that well. So again, this is things we can talk about on a daily basis. It really helps us, especially as the volatility is picking up and should pick up the rest of the year. We were able to make a lot of these things during the summer when things tend to be kind of quiet. Anyway, I don't know, Rodrigo, we can talk about some names. It's a DocuSign's another one where right here where people were saying, hey, it's testing its 50-day moving average. Shouldn't we be buying the stock? Because remember, it's bounced off this thing every time. And I was like, well, we can't just look at that. Look at the MACD chart. Okay, it's seen a negative cross. I don't think it's going to hold this time. And sure enough, it has sold off.
So Matt, we have a good question here. And I think it'd be good to share some of the stock picks that you are looking at moving forward into a correction. But before we go into that, there's a nice question here by Bhavin. Which tech indicator do you use or recommend for daily trade or swing trades? MACD, VWAP, Bollinger, DMA. If you just want to shed a little bit of light onto what your favorite technical indicators are to find daily swing trades or
Right.
even weekly trades.
Yeah, you use a couple of different ones. I'd really like to use the RSI because that tells you when things are getting oversold and overbought. It's also, again, the relative strength index, RSI. But always be careful to back check, because sometimes, for instance, a stock like Tesla, when it dips below 30, that's a very volatile stock, although it hasn't been as much recently. But so that's not enough. You got to go back and look and see, well, geez, you actually have to see it drop down all the way down to 20 or even lower before it becomes really oversold, becomes a great buying opportunity. And same thing on the upside. It doesn't just have to get above 70, it has to get above 80, even close to 90 before it comes to overbought. So make sure to look back on those for swing trades, because those can be very helpful. But it's always good to use them in combination of things. I like to use the Bollinger Bands charts along with the RSI chart, because when you get really shoot above or below those for those who don't know, again, just what I mentioned before, it shows two standard deviation move above or below its short-term moving average. In most cases, most people look at the 20-day moving average. And when you get a really high RSI and it's breaking above that two standard deviations, that upper line of its Bollinger Bands chart, it's a very overbought and really ripe for a sell-off. And you want to maybe look some puts or make short the stock. Just the opposite on a swing trade, when it gets very low and below the low, it gets oversold, and you get that below its Bollinger Band, the lower end of its Bollinger Band charts. A great opportunity to buy the stock. Now, again, I like MACD as well, but MACD is one where, and I don't want to drone on too long with this answer, but MACD charts are really good when you see a divergence, when you see a stock that keeps rallying, but sees a negative cross at lower levels, at a lower high. That's a divergence. Divergences are so important in technical analysis when you see a divergence, and that's a great one where you see it. But it also, and this key to in trading, is that you want to be able to add to positions. Don't be afraid to pay up to add to positions. Now, paying up to a long position or paying down, in other words, if you're shorting it, you could short at a lower level or pay a higher price for puts. And let me just frame this again. If you like a stock and you buy it at $10, and geez, it suddenly jumps to 15. I wish I'd bought more. I knew I should have bought more. And you beat yourself up and you don't buy anymore. Go ahead and buy some more. What if it jumps all the way to 20 and you still haven't bought it? It's like, go ahead. The stock's trading at 20. Your average price is now 15. You're adding to a winning position. Now you can have your stop level at $15. All but guarantees you won't lose money unless they make a big announcement overnight and the stock drops, goes out of business overnight. But in most cases, like that goes down to my cost. That amount, it cost me nothing. Okay. The people who buy at 10 and it goes to 5, and now their price is 7.5. Great, my average price is 7.5, but it's trading at 5. I've just added to a losing position. Now, there's nothing wrong with adding to losing positions, to very short, if you buy it at 10 and it goes to 980, that's fine. But once it drops to a certain point, you want to get out of the stock and reevaluate. You don't want to be adding to that position. It's very counterintuitive, but don't be afraid to do that. And the MACD charts are one of those things where you really get a nice, an oversold condition on the MACD, on the RSI charts, and then you add, then all of a sudden it sees a positive MACD cross. And then there's when I'm going to add some more. And then I have a nice stop at my average price, and I just let it run. And I raise my stop level as the stock keeps rallying, and everything's great. You're basically ensuring yourself that you have a profit. So
Hey,
that's the key
Matt,
thing to trading, I think.
hey, really quick, Matt here. We're just getting a couple of questions about the chat room. And I know that you guys are very excited to hear from Matt. I am excited as well. Last time he predicted correctly the February correction, right? That's if you want to call it that, right? But yes, that's pretty much the accuracy for Matt Maley. So I'm just going to go over a couple things here really quick for you guys for today only. All right, because we're getting so many questions, we just really have to get it out of the way and continue with the education. We're just going to post the links here really quick. It is 70% off if you guys want to join Matt Maley's chat room. You also get a free laptop. And as you know, everything that Matt is going over right now, like he does this every day in the chat room. I'm in the chat, like I'm obviously working, but I always have the chat room open on the side because, you call it right once, you call it right twice. We're like, Matt's been calling this out for weeks and weeks out. So people in the chat, like it's not a surprise. It's not a surprise for people in the chat, but obviously, that is the community that follows Matt. That is the community that we trade around. We make educated financial decisions. And I'm just going to drop my contact there really quick. If you guys can call me as well after we're done here with the workshop, and we'll take care of this for you. This is only for today though. So just want to make sure that you guys know that, that is Matt Maley's chat room. That's where he's going out, giving out picks. He's whipping out trades, and he's also giving feedback on strategies, feedback on picks, your picks. Like he said, if somebody comes in there and says like, what would you do with this particular stock? I was thinking about doing this. Well, Matt Maley does his thing, right? And he basically goes over, this is what I would do in this situation. This is why I wouldn't go that route. Maybe I would wait a little bit, because I remember exactly when Matt said, try to stay as much cash as you can. And because we do want to find some good opportunities in the correction territory. And that's what we've all been doing in the chat room. And even in choppy markets, even in bear markets, bull markets, ape markets, it doesn't matter. Matt is used to trading volatility. 40 years in the game gets you that. Trading at the highest level institutions gets you that. And that's what retail needs, a trading mentor like Matt. But just wanted to get these out of the questions. Louis, you're not seeing the link? Sorry, let me post it again here in the chat room. My bad.
Thanks, Rodrigo. So we'll share. We'll talk about the chat room a little bit later on. I just want to get. There's a lot of good questions here, Matt, about RSI and what you talked about there. So I'm just going to do some follow-up questions from some of the viewers. So one is from Jagar. In RSI, do you take the open, close, high, or low? And then there was a question about, but sometimes RSI continues for a while at times, and I'm assuming he meant without a movement in price. If you just want to follow up with, do you look at the RSI during open, close, during the high or the low? And then an example here was UPST RSI is above 70, overbought from the beginning from this month. How do you either explain that, or how would you view that?
Okay.
Thanks for your questions, Mike.
Can you see my Bloomberg right now? I just want to make sure. Yeah, good.
Yep.
Which was the one? Yeah, UP what?
UPST, and that was.
Oh yes. Okay. Yes.
From Mike B.
Yeah. Okay. Well, first of all, I want to. That was your last question. I should go back to the first question. But the thing about UP is a little bit hard on UPST, of course, is that the stock hasn't been public that long. So but like I said, it's always good to be able to go back and see what's been like. So look at it right here. See where the stock, the RSI, again, you get certain stocks, it gets up to that 70 level, and it's like, that's it. That's basically, it might get a little over 70. In this case, this one has, you see, it's gotten well above 70. And I'll just kind of give a little thing here. Boom. See, that's the level, and that tells us it got to, whoops. Yeah, 82. It got above 80, got above 80. We were talking about this on the chat room, okay? And here it came above 80. And we talked about buying puts. People made some nice money there. The same thing happened here when it got up to here. Now, the problem is it's suddenly trading in a very tight range. I'm sorry, take it back. In a very wide intraday range, but not really going anywhere. And that can play havoc on you. I guess my point is, on this particular stock, you know that really, if you really want to see a good entry point for a negative bet, it's going to be when it gets up above 80. Right now, I think this stock, because I think its MACD chart is starting to look a little dicey, I worry about it. But to answer the question, your initial question though about the relative strength index, as I look at it, I try to look at it in the middle of the day. The one thing that's hard is that you only get on the chart, they only give you where it closed that day. So in other words, if it got up to 89 in the middle of the day and closed at 82, that's all you're going to see when you're looking backwards. But that's okay but when I see it I look at it all day long, and but I am cognizant that when I'm comparing it to the past, it's compared to closing prices, not intraday prices. But again, it's key on every single stock you use, and that's why technical analysis is very, very difficult with stock. People have been asking about stocks that just went public 3 or 4 months ago. It's impossible. There's a lot of ways you can value it, but not technical analysis isn't one of them. But the stock's been around a year, you can at least get an idea, and this one has. But for other stocks, again, look at levels in the past that have become, because 70 is kind of the standard, but what has it really taken? This one's gotten to 70, but kept going on several different times. Here's one where it got to 70, okay, and kept on rallying, and it didn't really get crazy overbought, but it still sold off. So it's not a perfect science. So my point is, when you're really looking for those great opportunities, you don't just want to be guessing. It's like, well, it got to 70. Well, that's, even though you know something that worked, geez, you wish you'd gotten short the stock or bought a put there because it would have worked, but you were guessing. Here, you weren't guessing, because here it got incredibly overbought. You weren't guessing, and those sell-offs lasted for a long time. I think here it's going to happen again. We've just been held up because the market bought, the S&P bounced off its 50-day moving average today. Once that thing is broken, this market has become incredibly volatile. Again, going back to the S&P, but I don't want to get off too many tangents, but that's what I look at on the RSI. I only want to say the other thing is that moving averages, different ones are important for different. Again, you look in the past, what's been important. That's why I look at the S&P 5. I'm looking at the S&P, the 50-day moving average. Today was the 9th time this year it bounced off that moving average. The more times it bounces off a key moving average, the more important that support is. And that's good. It means it's very, very tough to break that support. But it also means once it finally does break that support, it's going to crater, especially in today's market with all these mechanized algorithms that are just going to, the machines are just going to start going boom, sell. The thing's going to go down very quickly. So again, I'm sure if I answered all the questions, you kind of asked if several of them in there, but hopefully
No, that was perfect, Matt. And I just want to bring you back to the point where you're talking about how the S&P and things are looking really volatile. I think it'd be really great for the viewers here. And again, I encourage all the viewers to ask questions, because we love making this conversational and not just one way of Matt presenting. But I just want to, I think maybe we can kickstart conversations by, if you can just maybe go through 2 or 3 picks that you are bullish on right now, or different trade setups that you're bullish on. That could be, like even an options type of a trade that if you like. If you just want to share maybe 2 or 3 examples or tickers that you're really watching or you're bullish on over the next turn of the market.
Okay, so I just, before we do that, just so here's the chart I was just talking about with the S&P 500. You can see how many times it has tested that. It did get below it for one day, but only very slightly. And it didn't even, the next day, it actually closed back above it. But you see how important this is. This is as of yesterday. It got right down to it today and then bounced again. But you break below that level, it's going to be scary. But anyway, to go back to what we were talking about. Well, to be honest with you, here are a couple ones. Here's one that I'm really worried about, and where I think people can look at buying puts really soon. And I'm going to be watching these. So you can say the ones I really like, but I like on the negative side. So put options. But here's a situation: ARK Investments. It's just nothing. If if we're going to have volatility, there's nothing. I mean, Kathy Woods is very successful, and she just became famous in the last couple of years. But she's been doing this a lot longer than just the last couple of years. She's very successful. So I'm not saying anything negative on her. I'm just saying that everybody has their ups and downs, and this one, she's very tied to the bull market, and she's doubling down on that. She got out of China, which is very smart. But look at this situation here with this chart. We know exactly where it's going to go. If it breaks below that support level, okay, it's touched it a couple of times. It breaks below that level, and this chart was done. Yeah, no, it was done today. So it's getting close to that level. And look what's happening here. I mean, even though it's trading sideways, it's seeing negative MACD crosses at lower levels. This was actually the equal level, but that's telling us that the momentum here is definitely waning. And if it breaks this level, it is going to fall hard. So, but again, we don't want to jump into it too soon. Sometimes you can nibble a little bit and then add to it when it really breaks that level. But that's one that I've been really looking at very closely for the last couple of days. And here's one I talked about earlier. Whoops, you know something? I'm going to go back to the to my Bloomberg because it's just easier for me to draw it up rather than here. What's here? Okay. Now I just want to see some of these ones I want to talk about here. Oh, okay. I hate to say it because I'm so cautious on the market. Most of my calls are rather bearish ones. But you know something? Actually, I'm going to go back.
But I think that's good, Matt, because I think this is, like we said, your ideas aren't just to weather the storm. You're actually looking for opportunities to profit off of this. So
exactly,
I think these are perfect examples.
Let me give you a thing. Let's go back to what we talked a lot about the energy stocks, but I want to just go here and apologize for flipping around. But here is, I talked about it before. Here we go. Okay, this is why I'm bullish on crude oil. This is about 2 or 3 weeks old, so it's even better. But look at what happened here. The WTI, this is a weekly, okay? What WTI stands for West Texas Intermediate Oil. Okay, look what happened to this thing. See how many times? This is a weekly chart. So the golden cross isn't the 200-day versus the 50-day versus 200-day. It's the 50-week versus the 200-week. So we've seen a positive cross there, positive cross there. In the last 10 years, this is only the third one. In fact, you go back to the beginning of the century, the 21 years, we've only had 3. Every single one of them has been followed by strong decline and strong rallies in crude oil. Look at that strong rally. It doesn't look as much because I've been looking shorter term charts. You can see that huge percentage move. Okay, it's a 40% move there. This one's seeing a positive move, and we're seeing oil start to rally. I think $80 is a no-brainer, and some people even talk about 100. By the end of the year, that seems a little much for me, but that's what people at Morgan Stanley, highly regarded firm, are talking about. And so look at this here. West Texas, I'm sorry. And the other thing too is just a couple of weeks ago, we have what was called an outside week. In other words, and again, I don't want to get too involved, but to say you had a higher low than, a lower low than the previous week, a higher high in the previous week, and a close above the previous week's high. In other words, it shows that the selling has been wide. There's nobody left to sell. They've thrown in the towel in the market, and sure enough, oil, which a couple of weeks ago was at 68, now it's at 72 and on its way higher. Okay, now what do we got here? This is the XOP, the oil and gas E&P exploration and production. So it's basically not just the big oil cap, big cap oil names, but also has some natural gas names in it. It has a lot of oil service companies in it. So here I was saying, look at this. Oil looks like it wants to break out. This thing, again, using technical analysis, I was losing the 100-day moving average. Why the 100-day? Again, each individual asset has a moving average that's more important to them. As you could tell easily, because it got right to that level and bounced. Well, as the old adage goes in technical analysis, old support becomes new resistance. Look what happened. It got down to that old support, and sure enough, when it broke it, like I said, you break a key support level, it falls out of bed. It tried to rally, couldn't get back above it, fell out of bed again. Now it's testing it though, but didn't fall right back. This one, it couldn't quite make it 6-7 days in a row. Okay, it kept testing it. Strong. That gave me a lot. It's like, wait a minute, if this was going to fail, it would have failed by now. Sure enough, the last couple of days, especially today, has broken well above that level, and it's going to go higher. So I really like the energy names. Again, it's a group that I've liked for almost a year now. I turned more cautious here. I got more bullish in here. I was a little early. This time it did dip a little bit further, but right now again, so that my name's the Devons of the. I just added Cabot Oil and Gas, which is a big natural gas name. It's getting a little overbought, so you want to be a little careful there on that one. But Chevron, because you still get a good dividend. That's a traditional name. FANG, F-A-N-G, which has nothing to do with technology stocks. That's been a great call for us. Those are some of the names that I'm really liking here because one of the reasons why I'm worried about the stock market is inflation and even stagflation. These energy stocks did well in the 1970s during stagflation. They should do well again, as should commodities overall. And you look at the CRB commodity index, which I could go back to, it's poised to break out after a huge run, got stuck in a sideways range, is bumping up against the top end of that range. It breaks out, it's going to get another rally leg. And so I'm looking at commodity-based names, especially in the oil sector.
Thanks, Matt. Appreciate that. So maybe let's spend some time. Let's get some tickers from people. I think there's excitement in the chat for people who are looking to get some insight on tickers. So in the chat, fire away, guys. Just drop any ticker that you want Matt to take a look at, and we'll go over. I think the first one was from KK, INDP. And we'll try and get to all of them, and then we'll also I know there were some questions about Matt's chat room, which like Rodrigo said, that is a place you want to be at this point in time as the market is kind of shifting gears, because you can even already tell from the ideas that Matt's giving you, like you're gonna make some money. So we'll go over a little bit of the chat room with Rodrigo. Let's spend some time doing some tickers. We'll start with INDP, and I'll start going down the list and see how many we can get.
INDP, I just want to look at the short and see. Yeah, this looks one of those meme stocks. You can see this is the short interest. It's not at its all-time high, but it's still pretty high. Let me just put it up here. It's just you need to be a little careful on these. You see how much it rallied. I mean, the stock. Well, let me look at this. It's just an unbelievable. Let me get rid of that out of the way. Unbelievable rally today. But look, it opened at 12 and it closed at below 11, but traded as high as 28. It's one of those meme names you just need to be careful of, because look how long it stays up. Not very long. So, and it already gave back most of its gains already. Could it bounce back one more time? Sure. These meme stocks are very, very, again, you can, what I like to do is look at them in the morning and see, I look up the most active options tickers, and we talk about that in the chat room. We're able to make some money there. But those are what we call lottery tickets. It's one where you buy the option and sell it the same day or maybe the next day, and no later than the next day because of these meme stocks. So be very careful. It's not overbought yet, but you can tell that it's really just being, the Reddit traders playing that game, and that's fine. But as liquidity becomes less plentiful, when the Fed and the ECB have both basically told us they're going to be cutting back on their QE programs before the end of the year, in the coming months, these meme trades aren't going to work anymore because there won't be enough liquidity around to squeeze those short positions. Okay,
the next one is from RB, and the ticker is PSX. Thank you, RB.
Okay, PSX. Okay, oops. I usually put the RSI. As you can tell, my go-to chart is the RSI chart. Now look at this thing. This has some nice potential here. It's it's not as oversold as I'd like to see it. Let's just take a quick look. I'm going to get rid of those moving averages. You can see how that 200-day moving average, it saw a death cross, so that was a good indication to you want to sell it. But now it's getting oversold. Let's look at its weekly chart. This is a weekly RSI chart. Dang. Yeah, it's not the key I'm a little worried about right here is that stock is, if it's testing this low from August, if it breaks below that, which the low was, looks like it's, the close, around about 64 and a half. It breaks below that, it's probably going to take another tumble lower and take the RSI chart down to that 30 level, so down to that 30 level that we worry about. So this is one that I would say, keep in your bonnet, keep on your radar screen. I think it's a little too early to jump in on the plus side. If you want to play it on the short side, if it breaks below that level, you can. But again, it's all you always have to imagine what's my risk return when an overbought stock breaks below a mini support level. It's got a lot more downside than a stock that's getting oversold. An oversold stock, unless they report, something really weird, having some really negative news, it's not going to go a whole lot further, a whole lot lower. So this is not one I want to play on the negative side, and it's one that, and I'll tell you something else though too that you can see very easily here. If you buy this on a long-term basis, you just buy the stock. You're not playing in the option, okay? You're just buying the stock. I'm going to take this out of the way. Let's say you do buy it when it gets oversold, okay? And you got a nice position. Maybe you buy it down at $60 after the RSI. Then it starts going up. You maybe buy a little bit more. Well, look at the 80 level. The 90 level. Don't be afraid to say, wait a minute, I bought it at 64. Why would I pay 90 later on? Because it got near that level there. It got right up to that level there. It got barely over that level there. And it failed each time. If this thing breaks up to the upside, it's going a lot higher. So don't be, you're going to raise your average price, but you're going to make a lot more money out of it. Don't be afraid to add when it breaks above $90.
Natural gas from Jesse.
Yeah, nat gas. We've had a great call on this. I mean, actually, I did more on the stocks because Cabot Oil and Gas was the one I picked. You can see now here it's getting quite overbought on a near-term basis. You see, and I love this play longer term. But look at the RSI again. It's above 80. That's kind of the danger zone. See where it got there? It wasn't, it didn't get crushed after the last time it got here, but it did get to 80 here in July. It got to 80 here in the second time in July. Both times were followed by mild pullbacks. This is a little bit more of a serious rally. So it does have me concerned. I'm thinking about taking a few chips off the table on but look at this. See, look at this now. It's at almost 82 on its weekly RSI chart. And let's go back further in time just to see what that means. I'm just going to years. I mean, 82 is pretty darn overbought. It's just delay. Okay, here we go. See now, you saw what happened here. It went crazy. Could it go that high? Sure. So it could go a lot higher, but boy, now we're really talking problems. But we made a higher high that's so bullish on a long-term basis, on a weekly basis. But it's the most overbought it's been, except for 2018 in the last 10 years, right? So that's getting dicey. This is not one you want to chase. And I just look at my friend Cabot Oil and Gas is one of my picks, which has a lot of exposure in the natural gas area. It's worked out. Look at that, really, really well. Now let's look at the Bollinger Bands chart on this one. Boy, now you give me a great idea because I should have looked at this. Oops, I see why. Okay, add study. I'm going to add the Bollinger Bands. Bang. Update. Let's get rid of these moving averages so you don't have to see so much. It's right at the top there. It's overbought. It's testing. No, this thing is, so it's not crazy though. You could see one more move, but this is an area you might want to take some profits on this stock and not sell the whole thing because I love it long term. You can trade around the position. But look at this Bollinger Band chart. Okay, it's breaking above its weekly one. This doesn't have a whole lot more to go. It could go a little bit higher here, but it's getting ready for a near-term pullback. And let me go back to natural gas. Let's look at the natural gas Bollinger Bands chart. And again, this is I love it long-term. And we don't want to sell this thing. In other words, sell all of it at all because it's going to do really well longer term. But we go to the Bollinger Bands. And again, just as a reminder for those who aren't familiar with it, gives you this two standard deviations above or below its 20-day moving average. And in this case, okay, whoops, oh geez. What did I do there? Hold on a second. Somehow I put the Bollinger Bands on its volume, which I didn't mean to do. So let's get rid of that. And let's get rid of that. And let's try it one more time. Add study. But again, we already looked at that, but let's look at the weekly. This is natural gas. The weekly is Wow, look at that. Look how high it is over its weekly. Oh my gosh. Thank you so much for highlighting that. I wish I should have seen it myself. I'm mad at myself for not noticing that. Uh, Natural gas is very, very overbought. I want to be taking profits on it's almost as much as it was here. Could it stay up for a little while like it did in 2018? Certainly. But this is very, very overbought. And like I said, I'll be looking for opportunities to buy back my COG. But I'm going to be suggesting that people take profits in this thing tomorrow and shave their position, maybe even by 50%, for just a long stock, and even look at some puts in this name on a short term. When I say puts, I don't mean till Friday. We do talk about very short term puts and calls on our chat, but we also talk about ones that go several weeks out. I'm going to go a couple weeks out because it could still go higher here, but this is dicey.
Let's do URA is another one from Carl. But I just want to get a feel for everyone. Drop in the chat one if you're learning something right now from Matt. I think it's very evident that Matt clearly knows how to analyze some stocks. But we just want to know, are you guys learning anything? If you see some ones, and we know that Matt's doing a good job and we're staying on topic. So we're going to keep going at tickers here. We'll try and do as much as we can. Again, this is just kind of, maybe we'll take a couple minute break, Rodrigo, and you can kind of jump in here. But this is an example of exactly what you get in the chat room with Matt. This is just a webinar, a masterclass of him showing you how he thinks about stocks. But this is what the members get day in and day out in the chat room with Matt. And they find opportunities together, just like how Matt kind of realized from a viewer that there's an opportunity. When you have hundreds of people in the chat room working together, a lot of good ideas come through. So we have a special offer for everyone here today. Only the people that are watching this webinar. So Rodrigo can jump in. He is the key account manager for Matt's products. And then we're going to go back into tickers. We'll try and get to as many as we can. And Frank, your question will be answered by Rodrigo. So let's just 2-3 minutes. Rodrigo will quickly give a little recap about the product, and we'll go back into tickers and the questions that you guys have. But thank you for everyone dropping the ones. That's really nice to see that people are getting value.
Good to see you guys are getting value too. I know a lot of other people that are doing that as well in the chat room every day. But yes, this is only going to be available for you guys here in the Zoom conference that we have going on. So we've dropped the information there, but just for today, it will come with a laptop, the chat room with Matt Maley, the mentorship, the education, the feedback on the trades. It's not just the fact that you're trading with a heavy hitter like Matt. It's also the fact that you're not vacuum trading, which is the number one mistake that retail traders make. It's the biggest mistake that like most retail traders make. And I know because I talk to them every single day. Being a trader myself, I can tell you that was one of my weaknesses that I couldn't even spot because, I was trying to find these chat rooms, and eventually I figured that these are all pump and dump chat rooms and none of these are real people, some of even bots and stuff. So everybody that's in the chat room with Matt Maley is a verified trader. It's a real person, right? Everybody is basically a subscriber to Matt Maley that's in that chat room. So we keep it clean as far as we're all about pretty much banking on the market, and it doesn't matter where the market's going, because I remember when the market was choppy, when the market was going down, Matt came with this pick out for Viacom. He sent out a sell alert when those weekly puts were up like 2,500, I think, and they ended up going all the way like in a huge amount. But these are some of the trades that you'll see in the chat room. Obviously, not everything is a home run, but you do get a lot of big winners, and not just in short-term option plays, but also stocks, finding good investments, finding good opportunities. Remember, you are getting the research that Matt Maley handles, right? Matt Maley is a chief market strategist at Miller Tabak. He's been there for about 12 years, right, Matt?
Right.
So he's a career man in this. I mean, you got to respect that. Somebody who's been doing this for their entire life. He's known in Wall Street. He knows Wall Street pretty well. And that's something that you and I as retail traders are not going to get to on our first or second year, unfortunately. And that's really where the experience comes in, finding the better fills, and not trading in a vacuum. If you feel you're trading in a vacuum, you keep making the same mistakes, you're red on 7 trading days on a row, and you don't know what's going on, it's very likely that you're really not filtering your ideas through through the right mentor, right, which would be Matt. And that's the benefit of the community. You have people that have your best interest in succeeding, because everybody in the chat room is trading along Matt, right? We're all following Matt's trades there. So we're all in the same boat. And that's really the best thing about the community. There's people here from all over the world. I've signed people here that are all the way from Indonesia, from Cambodia, from Ireland, from Brazil, from Mexico, Canada. Matt Maley's a star, and we already know this here at Benzinga because we've already heard his calls before. Whenever the market's acting well or not. And the questions that you guys are bringing are amazing, because that is what we want to see. We want to see that you guys have an actual interest in educating yourselves so that you can become a more successful trader. So the energy you guys bring is amazing. Matt brings a lot of energy as well. He's, as you can see, he has like that teacher mindset. He's very open on explaining. And this is every day in the chat room. This is literally one day, like a fraction of what we do in the chat room, which is you have a question on your strategies, you have a question on a trade that you're doing, filter it through Matt, filter it through a chief market strategist. Matt Maley, literally, he's that well recognized that every time there's like the market's going down, they only bring like one person that knows what they're talking about on CNBC and Bloomberg. That's Matt Maley, who they bring in. So the fact that you guys are able to have him on a chat room, I can't express really how lucky you are to have that. Because when I started, none of this existed. Right. And especially not at this high quality level. So I'm really glad that you guys are enjoying this, that you guys are having, a good time here. KK, let me ask, is there a deal where I can, just give me a call there. I will work something out for you. Don't worry.
Take up Rodrigo and give him a call. Like for anyone here that is getting any sort of value or learning something from Matt, for people who don't know who Matt is, I just say Google Matt Maley and look at Google Images, and you're gonna see Matt's face on CNBC. Like he's on TV. When CNBC and Bloomberg have no idea what's happening in the markets, they call Matt. And I think when was it, Matt? I think it was about a month ago that you got a phone call.
Carl Icahn?
From Carl Icahn. You got a phone call from Carl Icahn, and like these are the people who are that Matt deals
That's
with.
true.
He provides reports to institutions to say where the market is heading, and to be in the chat room with him is honestly, it's a hack to the markets, in my opinion.
I just want to take a moment here, Harvey, because I do want to definitely welcome here the new family members. Oh, Heat, I inspire you to continue learning. Hell yeah, man. That's what we're all about. Continue learning. Learning is a lifelong process, right? As you can see, Matt Maley's been in the hustle for 40 years, right? We just keep improving. We just keep getting better as people, as individual. We surround ourselves with the right community. Surround yourself with the people that actually care about your financial success as far as trading, because that's really what we are here. We're a bonded community. But I just did want to welcome here a couple of new members here. So give me a quick second, Harvey. Sorry. All right. Chandra, John, and Angel, thanks for joining the family. Let's go. Let me get this going here, guys. Technical delays. There we go.
Anytime someone joins, we're gonna do the horn for everyone. But drop that link in the chat again, Rodrigo. For anyone who's on the fence or needs more information, give Rodrigo a call. That's his direct line. That's not going to go to like an automated voice service. Rodrigo will answer. You'll see Rodrigo on the phone through the video here. So give him a call, send him an email if you need anything specific or custom, or you need more information. I think, what do you say, Matt? You want to do a couple more tickers for everyone here? We still got a bunch of people here.
Yes, and speaking of tickers and speaking of CNBC, I will be on tomorrow. It's just a short one on Trading Nation. I don't know what the ticker will be. They tell me shortly, just a short time in advance.
There you have it, guys. If you want to see Matt on TV, then
about 145 tomorrow Eastern time.
Yeah, and I love when Matt's on TV, because I tell my friends, I'm like, yeah, that guy, I chat with him in the chat room and he tells me what to trade.
And remember, guys, just remember when, like he said, Matt said, he goes to CNBC, they ask him a question. When you are in the chat room with Matt, you hear all about him from his personal picks, his personal strategies. That's something that's obviously more on the Matt side. So not something you're going to find on CNBC, on Bloomberg. That's just in the chat room that we're doing that.
So before I give you the next ticker, Matt, there was a good question here by AP. And I think we can maybe kickstart the ticker session with this question first. So his question is, can Matt share his thoughts on the market direction in the next few months especially with the inflation fears and the Fed's plan to start tapering? I think that's a great question before we kick off the next round of tickers.
Yeah, I'm very worried about the market for all the reasons you just mentioned, and then some. First of all, inflation. I mean, we got a little bit better inflation number the other day, and or yesterday, I guess, but it was only slightly better, slightly lower than expected. One tenth of a point. I mean, it was still high. The other inflation numbers have been high. As I mentioned, the CRB commodity index is about to break out. We have 3M, one of the biggest manufacturers in the world, one of the biggest global companies in the world, saying that they have big price problems, big pricing problems, big price increases. And they're one of many, but they're the biggest one who've come out with this, and they're citing this whole thing with supply chain issues. And well, we could go on and on about this, but just to talk about it, this is why I'm worried about stagflation, is that the economy is starting to slow a little bit. Doesn't mean we're going to go into recession, but it doesn't have to, because the stock market is so expensive that even just a slowing down of the economy is going to cause problems. But people, you get these people saying, don't worry about it. Inflation's good. Inflation is only good if it's driven by demand. If you have demand taking things higher, well, then they're getting better jobs, higher paying jobs, or they're getting raises. And so they can afford to pay more. They love it. Everybody's happy. And then the whole thing feeds on itself. The problem is when you have supply issues, like we had in the 1970s, you have stagflation. The economy slows. And again, back then, it was the oil embargo. And the people, OPEC stopped sending a lot less oil. The price shot up, but that caused, growth to slow down. Usually it's demand driven that causes prices to go up. This is a situation where higher prices cause demand to go down because it's a supply driven issue, not a demand driven one. So stagflation is a concern for me. And then when you get, as you say, I mean, the biggest thing for me is this whole thing about leverage. I mean, only a complete fool would say that the stock market rallied in March of last year for several months because the economy, everybody knew the economy was going to do better. Nobody knew how long this pandemic would last, but they all knew that, something, the Fed and the other global central banks are going to provide enough liquidity to hold up the economy, hold up the stock market. So they're building a bridge. Okay, but most bridges, you start here and you end there, maybe a little bit off, a little bit there. This one, suddenly we're a lot higher. Why? Because they kept the emergency level of stimulus going well after the emergency had passed. And let's face it, the Fed did this, the economy had slowed down, but the real reason they did it was because they were scared to death, because people don't realize the fixed income market had completely shut down. You couldn't even get a bid from Goldman Sachs or Morgan Stanley on a treasury, a U.S. treasury. They wouldn't make a market in it. That's never happened people don't talk about it because it happened overnight. By the time the market reopened, they were back and running, but barely so. And we were looking at 2008 all over again. And that's why the Fed provided the liquidity, because that's when they always provided the liquidity. They did the same thing in 2019 when there was a repo problem in the repo market. And they said it wasn't a QE program, but guess what? They provided all that liquidity, and the market, even though the economy didn't improve in the last 4 months of the year, earnings didn't get any better. Okay, the market took off and rallied the last 4 months of the year because of Fed liquidity. That liquidity is becoming less plentiful. They're not going to yank it all at once, but it's becoming less plentiful. When you have valuations at all-time highs, the stock market is as good as the economy has been, as good, and it's been a great year for earnings. The stock market is still well ahead of what we had. We had 30% rise in earnings, 30% rise in earnings, not from just last year, from 2019. Well, that's great, but the stock market's 60% higher. I'm sorry, 20. It's about 25 and 45%. In other words, the stock market is right a lot more than earnings have because of all this liquidity. It's going to become less plentiful. The ECB is saying that they're already said, they've announced they're going to start tapering. They said it's not tapering because it's only going to be a one-time thing. Then we'll make a decision later. Where the Fed is saying we're going to taper 1 month and it's going to go down every single month. No matter how you slice it, there's going to be less. At some point before the end of this year, we're going to have less liquidity in the marketplace. And when you have, that means that all those leverage trades are going to be that winding up of leverage help the market rally. The unwinding of leverage is going to have an impact on the stock market. And the Fed knows that. That's why they want to go gradually. But they want to let some air out of the bubble. I can drone on and on here, but one of the things that we heard Dallas Fed President Kaplan last week, and Cleveland Fed President Mester. She said the same thing. Kaplan said, "Hey, listen, I'm worried about the excess risk and risk taking." And now Mester talked more. He talked about the stock market. President Mester talked about the high yield market, but very much the same, very similar markets. And so they're worried about causing another bubble. Some already think it is a bubble, but a bigger bubble. And we're seeing what's happening in China. They are clamping down on the risk taking. It's not just they're worried about Jack Ma. They're worried about there's too much risk in the marketplace. Evergrande, which is this huge real estate giant, they're most leveraged, most indebted real estate developer in the world, they're going to have to go to restructuring. Nobody thought China would ever let that happen. They're saying, no, this is getting out of control. We're going to let them not necessarily fail, but they're not going to bail people out at $100, 100 cents on the dollar, not even 80 cents on the dollar. It's going to be like 70. It's going to be like 25 cents on the dollar. A lot of people are going to lose a lot of money, not just in China, but people who it's going to affect those banks, investors. We are in a situation where the world is starting to say we need to pull back on risk taking, and therefore, I'm sorry. I don't want to say we're going to have a repeat of 2000 or 2008, but we should see a correction. And I think because it will include the unwinding of leverage, it'll be more than just an 8 to 10% correction. It'll be something in the 10 to 20% correction. I'll just leave one last point. Again, I don't want to scare people too much because they're normal. Corrections are normal. 10% corrections are very normal. Deep corrections of 15 to 20% are great opportunities. They're also very normal, but people need to embrace them and have a little cash on the sidelines so you don't lose your head and sell at the exact wrong time, which most people do. This is why I keep talking about I want to help you profit and weather the storm, both. Okay, and the thing is, well, again, just to go back to the situation with so much leverage, the market. People, if you listen, somebody on Wall Street says the market won't go down more than 12%. It goes down maybe 10 to 12%. I'm telling you, if it goes down 10 or 12%, it has to go down because the market you don't get margin calls until the market has fallen that much. Okay, the market slowly drifts lower, and then it really falls out of bed after a significant decline because that's when the margin calls kick in, and because there's so much leverage. Why didn't the market get clobbered in 2013 when the Fed tapered? Well, the market was trading at 15 times earnings, less than 15 times earnings, not 22 times earnings, so it was very cheap. And there was no leverage because we just come out of the big crisis a few years earlier. There was no leverage in the marketplace, so nobody had to delever. This time, when the QE is tapered back on, they will have to delever. And again, I think the Fed would be ready and willing to step in before a thing turns into a disaster. So I'm not calling for a bear market, but I'm calling for a situation where the market should pull back, whether starting now or very soon. But I think the next year is going to be a tough one, and it's going to create an unbelievable buying opportunity. But why wait for that? Why not make some money on the way down? And then when that happens, you've got an extra cash there, and then you're buying these unbelievable companies at great prices, and then you can trade around them as they go higher over the next.
Yeah, this is honestly, Matt. Every time I talk with you, I learn so much. Like, it's amazing, and I know that with one question you go on. So, but that just shows how much information you have. So we'll do about a few more tickers. I know people want to keep rolling here. Guys, again, I want to make sure you guys are getting value. So drop a 1 in the chat if you're still getting value, if you're still learning stuff, because then we're going to keep going. We'll keep rolling, providing some education on this Wednesday evening. So the next
Harvey, I'm just going to do one thing because I see my battery's getting low. I'm just going to plug in my computer into the charger.
Oh, that gives Rodrigo a chance to, maybe we have some more people that join the family. We can welcome them. And again, you can go over the deal. I don't know if you guys know, but there's a free laptop that you get. That's something that you want to take advantage of today.
For all you guys that just joined here, we've been rock and rolling here with the one and only Matt Maley, Chief Market Strategist at Miller Tabak, 40-year veteran in the markets in Wall Street, going over tickers, going over the market in general, finding risks, how to assess it, how to manage it. So yeah, we're doing a workshop here that we do with Matt. Basically, we're going over the market, we're going over picks in the Zoom conference, which is a lot of you guys that are already very familiar with Matt. and Benzinga. I mean, who isn't at this point? But yes, Matt's dropping a special today. We're doing 70% off the chat room with Matt, and it does include a laptop. So everything you're seeing here, guys, I mean, this is a sneak peek to what really is going on in the chat room. I know because I'm there. I always have a window open with my chat room, but yes, this is fun. I'm glad that you guys are learning, enjoying. That's what it's about. Drop questions and all that. We love that you guys keep interacting. Are you good to go, Matt? You got your charger there now?
All set. Plug back in. I just want to make sure we didn't run out of gas there.
Copy. All right, keep
So-
rolling.
Yeah, the ticker, I know this person's been waiting a while. I want to grab their name. Al Lozano. He wants to go through RIG, RIG, RIG.
Rig Transocean, great company. Okay, now this is okay, this is a great one. Now, and again, now we talk about moving averages, MACDs, and all this other stuff, but there are patterns we also talk about with wedges and triangles, and we could go on and on. But they are very important, something I look at very carefully. But look at this one. I'm going to just take a couple because I got too many moving averages that are kind of cluttering up the thing. Well, first of all, it's kind of neutral on its RSI chart. That's okay. Let's add its MACD, see where it's trading on its MACD. Maybe it's convergence, divergence, and update that. Okay, and it's it looks like it's it's kind of flattening out here, but see how it's got its 200-day moving average. It did dip below it. That probably scared a few people. Okay, and rightfully so, but it made it back and regained it. Now that 200-day is really holding really well. This is one of these great opportunities where you get a if you want to buy the stock on a technical basis anyway. I mean, as you know, I'm very bullish on the fundamentals. Okay, but look at that line I just drew there. Okay, the 200-day moving average. If it breaks below that 200-day moving average, that's your stop out. You have a very tight stop. So right now, let's just make sure I give you the right level. Right now, that 200-day moving average is $3.48. That's only whatever 20 some odd cents, but on a percentage basis, that's significantly lower than where it is now. And again, it doesn't have to get, if it gets a penny or two below it, don't worry about it. But when it just get 5, again, you get 2 or 3% below it, which wouldn't be that much of this stock, of course, that causes problems. But look at this. Now I won't draw them in there because it would take too long, but there's your head, there's a shoulder, there's a shoulder. This stock breaks below $4. It is going to go to $5 in a New York minute. And again, so what is, okay, that's great. $4, $5. Okay, that's okay. Guess what? That's 27%. 27%. You want to be not just buying the stock, you ought to be looking at calls if and when this stock breaks above $4. Again, you always want a meaningful break. You can get head fakes all the time. So if it goes to $4.01, that's not enough. But you get it above 410, 415, and again, you lose it. Don't be afraid to leave a little money on the table to give you that confidence that it is indeed breaking out. So I'm paying less attention to the 200-day moving average, except that it gives me a good level to give us a stop, and then you can get out of the stock. And it's like it wouldn't be down much at all. Okay, fine. And then you nibble a little bit right now, and then you add in a major way when it breaks above $4. And if it breaks below, you say, okay, this isn't working. I'm not going to play that anymore. I'm just going to wait until it breaks above $4 next time. You will have lost so little money. That's the whole thing. Risk reward. You're going to lose money on trades. You're going to, and it's okay. I don't care. You name the greatest traders of all time. They've all lost and had plenty of losing trades. The key is they've been able to limit their losses. And they get it, so they let the winners run, and then you make a lot of money there, and you limit the number of losses you have, and then if you limit the losses just to less than 10%, then you're really doing well. And again, this thing runs. If you make 27, the stock goes up 27% in like a couple of weeks, the options are going to go up several 100%. So again, I'm a little worried too here because the MACD starts curling over a little bit. It hasn't made a negative thing there, but this is what I'm thinking. Nibble here, nice stop loss at its 200-day, and then you really get aggressive if it breaks above $4.
I hope that answers your question, Al Lozano. You've given me a ticker to add to my watch list. So I'll be looking for that 410 breakout point because I'm going to go in too. Next one, let's go from the YouTube folks. I promised Where's their name? Affirm, AFRM from SP on
Okay.
YouTube.
If we're doing a firm, actually, let me just formulate a little question here for you, Matt. I'm personally in a firm, but so this is a thesis, right? And your perspective on it would be greatly appreciated here, as you know, as we are live trading that one. So, as you know, a firm makes like about maybe 10 or something, 15% of Peloton sales. However, they just struck that deal with Amazon, assuming they get even a similar, like, you know, like a similar 10% or 5%. Where do you see a firm going if they end up catching, like if they end up following that structure, you know, with Peloton? Let's say even 5% of Amazon online sales. It's still a huge, like, how do you see that happening for a firm?
Well, this one you definitely you have to look at it on a fundamental basis, because it's, you know, it hasn't even been, well, it's been trading basically 1 year, and it's hard to look at the patterns. You can see it's a little overbought on its RSI. You see it doesn't even have a 200-day moving average. That would be a purple line because it hasn't been trading for 200 days, and it's a let's just see here. We can look at its weekly things, but that's not as big a deal there. Yeah, it's a little overbought. As you can see, it's overbought there. The thing is, though, here, this is such a good day. It's such a good week. It's called an outside up week. We talked about that. That's bullish. So even though it's probably going to take a little bit of a breather on the fundamental side, as you mentioned, Rodrigo, this is really positive news. And so that's really where you want to play it right now. I'm just going to look at the MACD chart real quick. We look at a lot of different ones, and MACD, yeah, it looks fine. It looks like, you know, it's one that will, if you know, it's had these two big spikes higher. If the overall market gets hit, it could pull back. But the long-term play on this is going to be, it should be, like you say, on a fundamental basis. It's the kind of play that you want to see. They're building on their businesses. There's so many businesses now that you know, you're going on hope, and this one, you know, and believe me, almost every company in the world started on hope. So it's not like that's a problem, but it's just makes the risk reward a lot riskier. Once you start to get real reasons to be buying the stock and real contracts, it builds on itself. And you know, it's winning begets winning. I mean, you know, it's like anything else. You get, you know, followers, more followers. They see, well, I don't want to follow that person. He has very few followers. Well, all of a sudden he's got a lot of followers. Oh, he must be worth following. And suddenly it's a lot of people doing business with this company, or they're buying their product, whatever it happens to be. We're talking about this in general, of course, in a general way. Sales beget sales. And when you start working with, top well-respected firms with the clout that these companies have, the upside is going to be is tremendous. And again, you can see here it gets above 140. I mean, it's just,
Yeah, it's a buy now, pay later kind of thing. You know,
yeah.
that
I think
PayPal's trying to get into that. I even saw that. I think it was Goldman Sachs. They acquired a company that does buy now, pay later. It seems like everybody's rushing into that.
yeah. So you know, it's another thing I want to say. One other thing while we're here, and it's just a harder one for. There's the one thing too here. Okay, so yeah, it's hard to know. It's short interest is 11 million shares. It's near its high, but 11 million shares is not a crazy high number. But it's a meme stock, so it makes it a bit tougher. I mean, this is a stock that, you know, as a buy now, pay later is great, but it's also a stock where you might be buying it now and really benefiting later. Because it is overbought on a near-term basis. You just want to be a little careful here. I like the story long-term, but like I said, I love the long-term story in NVIDIA before it rolled over and got, you know, it fell 14% in just a few days.
Love it. Love it. All right, guys. Next ticker was TAL. 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 Who was it from? Let me find out who it was from. Aram. I don't know if I said your name fully right, but TAL. Then we'll do Roku after that, and
Is
then
this
keep asking questions, guys. I just want to reiterate to everyone here, we still have like, it's impressive. It's almost an hour and a half in, and we've had very few people drop off this webinar. So A, thank you, and B, as long as you guys are asking questions and tickers, I'm good to keep going. I'm sure Rodrigo's good to keep going. Matt, it's up to you if you're good to keep going.
Oh yeah.
But as long as you guys are asking questions and asking kickers and you guys are learning, that's most important. As long as you're learning, we'll keep it going. So feel free to
Yep.
ask
I mean, it's
questions,
like
drop kickers, and
as I hope you can tell, I'm very very passionate about the market, so I don't have any problem keeping going.
perfect. So TAL is the next one.
Now, is this one of the Chinese China? I mean, it looks like one of those. Is one of those ones that was affected by the China news, where they basically took over the.
Chinese is a TAL is a Chinese education stock, according to Noah Posner.
Yeah, these are the ones that had that announcement a few weeks ago. I'll tell you, I'm very nervous, still nervous about the China stocks and these stocks in particular, but just the whole market. And there's a guy today who I respect very, very much, who was on TV today, John Rutledge, and he has worked in China his whole life, not just on the financial side of things, also on the political side of things. And a long, long career, 40, 50 years, and incredibly well respected. So whenever he speaks, I pay attention. And he definitely echoed what I had been thinking, and he is much more knowledgeable about China than I am. And he's got another President Xi or Chairman Xi of China. He's got another Congress next year. Next October. So we got a whole nother year where and that's what he was saying. This is going to be a whole nother year of these issues. This is not going away. So this kind of clampdown is, and you see I was thinking it's every week. And a couple of pretty smart investors came in, including Kathy Wood, who said, I'm going to buy these on weakness here. And then all of a sudden, within 2 weeks, she said, you know something, I'm out. And she is out. And Dan Niles is another one who tried to buy on weakness. Very, very well respected technology hedge fund manager who I love to follow whenever he's on TV. I listen to what he has to say. Very smart guy. And he did the same thing. He got in too early. He admitted it. It was it. He lost some money and got out. Now you got a guy like John Rutledge. He's just on top of things there. And I think this is going to be a tough way. It's going to present unbelievable buying opportunity at some point in the next 6 to 12 months. But right now, I just on the geopolitical issues, it just seems like it's not going to be bouncing back anytime soon. If I miss it, that's okay. Because there's sometimes where I see something where I go, hey, I'm not an expert on China, so I follow as closely as I can. I have a pretty good feeling that this is not going to work out for a while. But then when I hear people like this, especially John Rutledge, I really sit back and notice. And so this is one I'm going to avoid. I think they say dead money. I don't know if it's going to go down much more from here.
So while we're on the topic of the Chinese companies, I know someone on YouTube here wants to ask you about Evergrande. I think this was, if you just want to give some quick commentary on that. While we're on the topic, I think this is taking a lot of news headlines, and I think it's good for people to learn about this.
Well, this is one of the big concerns I have right now. Is it just goes to China has forever. When people were saying it was trading at their bonds were trading at 80 cents on the dollar, and people are like, don't worry, it's 80 cents on the dollar. But it's China. China's not going to let them. They're not going to let them. They're not even have to restructure. They'll bail them out, and everyone will get 100 cents on our dollar. And it dropped to 60 cents. And it dropped a little bit further. And everybody's like saying, uh-oh. And then China came out publicly and made some comments like, no, you're on your own. And not you're on your own, but they hinted to things. So I don't think they're going to let them go under. They will bail them out at some point, but they are telling people, and they came out today, or actually last night, and said they went to the Ministry of Finance, went to the banks and said, you're not getting those interest payments that are due next week. You're not getting them. And even one of their loans, they're not even getting the principal payment. So this is a serious issue. And I'm really surprised that the global stock market is not taking a bigger deal. Now, I'm not saying this is, a Lehman Brothers type situation at all. But what I'm saying is that, and you look at the repo market in China, those rates are at 3-month high, or at least they were this morning. I haven't checked them since this morning, but 3-month high. That shows their stress in their marketplace right now. So, I think they got things under control enough to keep the, a major catastrophe from taking place. But it doesn't, they want to let some air out of their bubble. They want people to be delisting. I mean, they want to do some bearish things in their marketplace. And if that's what they want to do, it's gonna happen. And as we've seen, it's been happening for quite a while, many, many months now, really for almost a full year, ever since that first issue with Jack Ma, when he kind of disappeared for a while, or he still disappeared. But so I'm very cautious on this situation. Again, when you're seeing in their credit markets, the repo markets moving around, it's something that could affect the broader market in a bigger way. I'm surprised it hasn't already.
Okay, next ticker, and it's come up again. Perfect timing. Roku, ROKU, Roku. Again, thanks for the questions, guys. We're actually getting some very insightful questions. Great tickers. So we're gonna keep going if you guys keep asking. So keep them coming.
Well, here's one. This is I'm gonna go back a little ways just so we can look at it a little longer term. 2001. I'll go all the way back to 2014. Okay.
For anyone, just quickly, for anyone who's asking questions on the Q&A within the Zoom, can you just ask the question in the chat room? It's just easier for us to see them all in one spot. So I know there's a couple of questions in there, but if you can just move them over to the chat, that helps us get them answered quicker.
Yeah, here's a stock that's interesting because it was very negative, and obviously it's already come down, obviously a lot. So now we're starting to look at this on the buy side, but look at this double top. See, double top. So that's a killer. And so even here was one where when it come down like this, it was very, very overbought, and then it made a lower high on that. We could look at his MACD chart too, really quickly, and that study update. Okay, there we are. Ooh, it's rolled back over again, so that's a little dicey. But you see here, the MACD chart, even though the stock made a higher high, the MACD chart made a negative cross at a lower high. Oh, classic double top. So that was a great signal. And then it's like, well, geez, it's already fallen a lot. Shouldn't I buy it? Well, then it made not only did it followed that with a key lower low and the style. So this was, however, so that was a tough situation. Now it's getting oversold. You see its RSI chart. It could get, this is 2020. Always got to be careful. Again, well, geez, it got way more oversold. Well, there's a reason for that. The world was in a global meltdown. So it usually doesn't. It could get a little bit more oversold. So what I'm saying is that 300. It looks like it wants to drop a little bit further, especially with this MACD cross. But you want to look at if it can hold that 300 level. You can see it dropped a little below 300. It's geez, boy, this could be setting up. This is going to be one of those, if and when the market does correct, this is going to be an unbelievable buying opportunity to stock, because again, you want to buy a stock that's kind of oversold or a stock that's very oversold. Now look at this, it's breaking below its trend line too, which I don't like. Trend line from March 2020. So that tells me it's probably going to go lower. MACD crossing here, got it drop below its 200-day moving average. Well, let's see here. It's hard for you to see, so I'm going to zoom in on that. Make it a little bit easier. There we go. Okay, that's the 200-day moving average. That's the purple line. Got below it. It tried to break back above it a couple of times and failed. And now it's dropped below its trend line. So it looks like it wants to go a little bit lower. However, like I said, it is getting quite oversold on its RSI chart. Let's look at the weekly. Yeah, see, oh, yeah. So it's still not, I want to see this thing get down, 280 or so. It looks like it wants to go lower here near term. And if the overall market goes lower, this will too. But then if you get that weekly RSI down here, like it did in 2020, oh my gosh, this is going to be a screaming buy. It's going to be a great one. So keep that on your, I would say right now, I wouldn't chase it. Would you want to short it? It's already down a lot. So again, stocks that are overbought are going to give you more upside on if they fall. If you short it or buy a multi-week put or multi-month put option. But this is one. If you want to go on the long side, I'd wait a little bit. And but it should be a great one when we do get that if we do get it. I think we will get that correction.
Okay, we'll do two more tickers here. First one is Zillow. Z is the ticker, or Z. I'm Canadian. I don't know if I say that the way the Americans say it.
Wait, Z. Z. Okay. Yes. Okay. I thought you said okay. Equity.
And then we'll do Boeing, BA.
Okay. Sure. Zillow. I mean, it's just, the stock is, it's oversold, but look at it. It's been oversold. It's, raised a little bit. Can't get over its days. Here it's classic. Broke its 200-day, failed it. Now it can't even get above its. Let me get rid of that 100-day moving average. Just kind of clutters up the chart. Get that out of there. Okay, so it failed there, dropped below its 50-day moving. Couldn't even get back above its 50-day again. So right now it's it looks like it's close to making a lower low, and it's not extremely oversold. It's just kind of it's kind of dead money in my mind. It's not it again, it hasn't been public that long, but it's on the weekly basis it's getting pretty close to the most oversold it's been. So I guess my point is, if it can hold these levels and not make a lower low, I'm sorry. That's the one other thing, just to go back. It's so simple and it's an easy thing, but it is important, is that when you see something making a lower highs and lower lows, that's negative until it sees a higher high. And it's just the opposite on a stock that's making higher highs and higher lows and higher highs. That's very bullish until it changes. So what you're saying right now is, if it can hold here, kind of avoid making a lower low here at $90, that'll be bullish if it can bounce back. What we're really going to be looking at is as low as the $100 level. You can see that just above 100. That would give us its first higher high. That's where you start nibbling on this stock. It's like, well, geez, I'd miss 10% move. Yeah. But unless it gets really washed out. So I guess my point is, when you really want that key turning point where we really make a lot of money, you want to see this thing get really washed out, drop below 30 on its RSI chart, get really oversold on it, or really extended on the negative side on its Bollinger Bands chart. That will probably take one more fall. But if it doesn't, what you do is at that $100 level, if it breaks above that, that'll give you that traditional technicians, they're trying to catch the 70% in the middle, which is good. I mean, that's fine. We do that all the time. You get above 70%. But the thing is, if you buy it here, and then this is what you'll be adding to it above 100, if it does get washed out. But I just worry that this is, it's ever since it went public, it's been just kind of drifting lower. It just had a tough time. And again, I'm just talking on a technical basis. Okay, now having said all that, I'll say that member of my family works for Compass, who was a competitor. So maybe I'm a little skewed in that you're asking me about their competition. And but I don't mean to sound overly bearish. But it just stock it just can't get out of its own way. If it breaks below 90, it's going to see another leg lower.
Okay, we're gonna do two more tickers. Last one, XELA for Jagar again, and then we'll do Boeing quickly. And then Matt, you can drop, and then we'll answer some questions about the actual. They want Tesla too, Matt. Do you want to do Tesla as well? Maybe we can do these rapid fire. So XCLA first.
Okay, now this is this is high risk, high reward. $2 stocks, boy, you can really make a lot of money on these. But the problem with this one right now is, you see again, this is lower. Okay, it pulled back here, but made a lower high. A lower low, another lower high. Can't break above its 50-day moving average. It's now breaking below its 200-day moving average and making another lower low. It's only a slight one, so maybe it can bounce back. But again, I'd rather see the RSI, see what it did in May. Even that bit wasn't that much of a bounce. But here was when it got down a little bit more oversold, got right down near that 30 level. If you get that RSI down to 30, it's going to be a much more compelling bet. Then it's be kind of washed out, and you can really look to add to the stock. But the fact, again, lower high, lower low, failure to break above the 50-day on several tries in 5 or 6 days, breaks below its 200-day. Remember, the 200-day it held this time. It didn't hold that time. It looks like it wants to go lower. But like I said, here's a stock that once it gets washed out, really, you get that thing down 30, especially if it gets a little below 30, that's going to be a great opportunity to buy it for this kind of a spike right here, which will make you a lot of money. And Tesla, you want it, right?
Tesla, and then
what does Tesla do? I have no idea.
I think they're a cannabis company. This is the last one, and then
I'll
Matt,
do
you
Boeing.
can.
I'll do Boeing real quick because it's a great long-term call.
Yeah, so Matt, let's do Tesla, and then maybe you could do closing remarks about market outlook for short term. When do you think the correction will happen? Just a kind of quick.
Right.
So okay, Boeing. AJ, if you join the chat room, Matt will do. I'm just kidding. Okay, do Tesla and Boeing super quick, rapid
Okay,
fire,
so here we
and
are.
then some closing remarks, and then we'll talk about how people can get more of you,
Right.
because clearly people are loving what you're providing them today. So
Well, you can see Tesla here. It was riding its 200-day moving average and broke out. Okay, so it came back down, but it held. That's really nice. And then again, broke out slightly, a little higher high, but then fell over. That's a little disappointing. But it held its 200-day moving average. Another little. It's just like it looks like it wants to keep going back and test its 200-day moving average. My point is that I picked this as a tier 2 pick, so I do like it. If it breaks below its 200-day moving average in any kind of meaningful fashion, I will pull away from that, and I will be able to do it at a profit but now the 200-day moving average is higher than it was here. So that's why I bought it in here. I can't remember the exact price where I got into it, but it was in here. And so we'll get it at a profit there, and that's my stop. But it looks like it. Can see down here it's a little overbought. But the thing is, I think Elon Musk has won. I mean, his short guys, the short sellers, they've thrown in the towel. I mean, I don't know if some of the real famous ones who are really worried about it, but it looks like they're going to survive. So I just don't. If this thing it could drop below its 200-day moving average if we get a deep correction of the stock market, because people will, this will be a source of cash. People will sell it to raise money for things that they can't sell. So that would be a great opportunity to buy this stuff. But I like it longer term. And see how it's it's not really overbought yet. It's nowhere near as overbought as it has been in the past. And this again, that's the weekly chart. Let's go back to the daily real quick. This is a nice solid one. And this again higher. I wish it's just not as volatile on either direction. But boy, this is really nice. Since May, higher high, higher low, higher high, higher low, higher high. Keep that 200-day moving average. You know they can move a little below it. You can get out of the stock there, but reevaluate, because I think it's going higher longer term. And if it breaks above, its old highs, let's do the stock. That's the intraday basis. Let's just do the stock on a closing basis. Again, it's approaching this. If it's approaching this, see, very, very close to those closing highs from April of this year, 762, 763. You break above that, and it's not going to break above that if the market corrects soon. But when it does, I mean, it's going to test its new high very, very quickly. Not in a few days, but in a matter of weeks, in my opinion. It won't take months. This has been a very gradual rally here. But once it breaks in, it might pull back again. Once it breaks that high from April, I think it's going to take off. And because it's really lost some of that big momentum money. Obviously, they're still in it, but they're not as excited about it as they had been in previous years. It breaks above those April highs. That money, and there's a lot of that institutional momentum money out there, it's going to jump back into the stock. So I'm definitely bullish. My only caution, I guess, is that I do think it could pull back if and when the market corrects.
So
and then go ahead.
The last ticker we'll do is Boeing BA, and
Okay.
then I think everybody's just wanting kind of a rounding out of your thoughts within the next couple of days, next couple of weeks of what's going to happen in the market. And when do you think this correction, I know it's hard to time the market, but when you think this will happen? Is it going to be, next week or next month or this quarter? And then from there, we can do a Q&A, because I know there's lots of questions about Matt, how people can get more of Matt, because it's very evident. Everyone in the chat room knows, and have already been saying they're getting lots of value. Matt knows the markets inside out. So I think let's do Boeing, and then you can end off with kind of a summary of what's going to happen in the markets in the next couple of days, weeks.
See how much of a key level this is for Boeing. It's its trend line going back to March, March lows. The thing about Boeing, though, is it was already down a lot. Let's go further back because of this whole problem with that 737 plane. And so before the pandemic hit, and before the pandemic hurt the, see, look how much it was already down. This is when the pandemic hit. Most stocks were at all-time highs. This stock was down. I love this stock long term. If the market corrects, I mean, if it breaks below 200, this is what we call a descending triangle pattern. It breaks below 200, it's gonna get hit again, and it's testing. It's again, it's trend line going back to the pandemic lows, and the company keeps making stupid mistakes. But the CEO does have a good long-term reputation, and even though he continues to make some mistakes that the previous one had already made. They're different mistakes and not as bad, nowhere near as bad, but still mistakes I didn't think he would make. But there are 2 airplane manufacturers in the world. 2, all right? There's no way these guys aren't going to survive and thrive. They're also very, very, very important on our for military. I mean, they're a military supplier. Forget about. I mean, I don't think a whole lot of people worried that they were going to go out of business, because they are way, way, way too big and too important to fail. But look at this here, which I like, is that I think. Oh, now, gosh, you look at this. See how that, again, it held. It's old trend line going back further. So we got what's called again, this is a symmetrical triangle pattern, but it's it may come back down. The 200 level would take it back down and maybe get a little below that. But this company's not going out of business. The government is going to keep paying, keep giving them military things. There goes my dog's even so excited about it. The airline industry, it's going to be fine. It's going to recover. Again, they're too big to fail, even if there's some takeovers and stuff. And there can only be, there's not many airlines left. So I guess my point is, on a near-term basis, you need to be a little careful because of the overall market. But I know if you own it already, especially if you own it at lower levels, I would hold on to it. If it gets a washout move with the rest of the market, it's going to be a great opportunity to buy it because they, on a fundamental basis, they are too big to fail. They are as big as the New York banks were in 2008. The country cannot. We need airline travel the economy cannot survive without airline travel, and we can't have it without military defense. It's just too important. So for a long-term trade, you want to buy some here, I'd go ahead and buy some. Buy some, and if it gets down, load up the truck. It's not going to be one where you're going to make a tech stock where it's going to go up 300% in a year, but it's going to be a great core holding. And let me just do one other thing while we're doing it here. Let's see what its yield. See, they don't have a dividend. But boy, this one's going to, at some point, once they get back on the feet, then they don't have the political implications of that 737 thing. They're going to be able to pay a dividend. If you want safety, again, the stock can go down in a bear market or in a correction, but it's already down a lot more than other stocks, or it hasn't recovered anywhere near as much as other stocks. And long term, it's too big to fail. What is there better than that? So just to wrap up. You can tell I'm very passionate about the markets. I love the markets. There's a lot of nuances. We make mistakes all the time. I say, make mistakes. Well, everybody makes mistakes, but we also, it's still an art. There's times when things just look, there's no way it can go any lower or any higher, and they do. I mean, one of the smartest people in the business, what was his first name? Robertson, who ran Tiger Management, the original Tiger Management, and he threw in the towel. He said, "I just don't understand this market anymore." He threw in the towel in 1999, and less than a year later, the market topped and rolled over. One of the greatest investors of all time. Even can get fooled from time to time, but and I just think that this market is getting to a point that the key. I'm going to finish with this and just talk about two things: intermediate term and short term. intermediate term, I really feel the market is going to see a correction starting very soon. Now, I've been saying that for a couple of weeks now, and it hasn't started yet, but maybe we're starting to see a semblance of it right now. But just remember what happened with all, we go back to this liquidity thing. I'm not saying the whole rally has been liquidity driven, but a lot of it has been. And we saw what happened in 2019. There was people forget, there was a repo, a crisis in the repo market, and the Fed supplied a lot of liquidity. I mentioned this before, and that liquidity pushed the market higher from September through February of the next year until the pandemic came. And even though earnings didn't improve, the economy didn't improve, the market went considerably higher because of all that liquidity. Then the market, of course, caved with the pandemic. Then this new wave of liquidity came in. The wave of liquidity saved the system and the economy. But even after it saved that and we're out of the emergency, they kept providing this liquidity. So the market got pushed way higher than it should have done. One of the things, and I can't prove this, but it's something that I've believed and from the evidence that I've seen, and from people I've talked to, many of them are retired, but CEOs and such. But in the late 1990s, people don't realize there was a huge amount of liquidity added to the system behind the scenes. It wasn't a QE program. It was a situation where, my dog going crazy down there, where the QE program, where everybody was afraid of Y2K. Okay, Y2K. People, that was not a problem. It was only not a problem because the companies spent billions and billions of dollars to fix it before it became an issue in the year 2000. But everybody was worried that all the computers were set that when it went to 2000, when the year 2000 came, their computers would tell them it was 1900 because 00 would mean 1900. And that meant everything would cave in. And they scrambled for 5 or 6 years to fix their computers, and they were able to do it. But they were also flooded the system so that people wouldn't panic while as they got closer to the year 2000, and people wouldn't pull their money out of the banks because we're in a fractional banking system. I mean, everybody puts money in, but then it's loaned back out. So if everybody comes for their money all at once, there's not that much money in the bank. It's all loaned out. I mean, we've all seen It's a Wonderful Life. That's what it is. Okay, so they had to make sure there was liquidity in the system, and that liquidity, where did it go? Some went into the economy, when not enough went there, it went into the markets. Guess what happened a month and a half after the end of 2000 came along? 2000 came along, and they gave it a little time to make sure that the computers were working fine. A month and a half into it, they said, okay, everything's working fine, we can pull the liquidity. And what happened? Stock market crashed, or we went into a bear market. I mean, it made a double top later in the year, but we know what happened after that. So this is very similar to that. Luckily, this time around, the Fed will taper, and they know what's happening. They know the impact they're having, so they can step in at some point if and when the things get dicey. But I don't think they're going to do that immediately because they don't want to have a bubble. So I think they're doing this purposely. Again, they're even talking about it, that they don't want this excess risk taking to continue. Therefore, I think that we are going to see a concerted effort actually to let some air out of this bubble, whether it's a great big bubble. I don't think it's a great big bubble we saw in 2000, but it's still, again, the bubble's a bad word, but they want to let some little air out of the tire because it's overinflated. And they'll get it down to a level that is more conducive with the underlying fundamentals. That means we'll face some headwinds in the stock market and create volatility and great opportunities. But those who buy on every little dip are going to get their heads handed to them, just like they did in 2000, just like they did in 2007, 2008. On a very short-term basis, we are seeing signs that that this market's going to start to roll over very, very soon. The key is going to be this 50-day moving average. If we get a break of the 50-day moving average on the S&P 500, that's when you know that it's really started. You can nibble a little bit here with some negative bets, but you can add to them and be much more aggressive if it breaks. Again, if it just breaks 0.5% below, it's no big deal. You get 2% below that 50-day moving average, things are going to get ugly very quickly. And that's kind of my feeling right now. I hate to be, again, it presents opportunities. Embrace it. The Fed is not stupid. They know corrections have not come to an end. Bear markets have not come to an end. Recessions have not been. We're going to see recessions. I'm not calling for a recession or bear market. What I am calling for is a correction. Will probably turn into a deep one. But that, embrace it and have a little cash on the side. And again, if you have a little cash on the side, not only will you have an opportunity to buy stocks when the market's down, but you'll also feel much more confident in being willing to not sell. And that's half the battle, because individual investors all the time, at the absolute worst time, when the market's flat on its back and completely washed out, they're like, get me out, and I sell. And if you've got a little cash on hand, you won't be the one doing that. You'll either be buying, or at least you'll be buying a little bit after that. I can't tell you how many people sold at the wrong time in 2009, and it took them years to get back into the market.
Yeah, and I love, Matt, like now is the best time, like at this point in time right now, to join an inner circle like yours, to really get grasp of these opportunities that are coming. So everyone who's watching this webinar here today, like you are lucky that you are here right now at this moment, because clearly from the tickers that Matt's been talking about, the oil stocks that he's bullish on, he doesn't just wait for the storm to pass. He's making money on the way down, and then he's prepared for the way up. So that's a testament to Matt. And we can probably do some Q&A. I know we got some questions about how to get more of Matt and how to take advantage of your knowledge and profit more. So Rodrigo, if you want to again talk about the special offer that we have today. Thank you, Matt, for such an insightful session. I think everyone in the chat, again, I've done this twice, and every single time we get a whole bunch of ones, but let's this time put caps yes if you learned something from Matt today. Caps yes. That way it gives us confidence, it gives Matt confidence that these sessions are educational and providing value for people. So drop in the chat capital yes if you learned something from Matt. And again, if you want to get Matt, if you want to be with Matt every day in this chat room to talk stocks, get information from tickers, understand truly what's happening in the markets, then we have a special offer for you today. And Rodrigo's our main guy to answer the questions here, and you can go through a Q&A. Thank you, Matt. We'll let you take care of your dog. I think he was getting wild up about the correction too. So if Matt's dog is worried about correction and is excited about opportunities, then you better well damn be as well. So thank you, Matt. We'll talk soon, and we'll see you.
Thank you, Matt.
Rodrigo and I will see you in the chat. So
sounds great.
Yep, we'll stay here, guys. Going over a couple things here with you. Obviously, you are familiar now with Matt Maley. I've known him for some time here. I'm very familiar, really, with his, how he approaches the market. Before I continue, though, we're going to get a little bit more into that. Obviously, Matt has to go back into the chat room and do his research. As you know, being a chief market strategist is not a walk in the park, right? But I got a new member here that I definitely want to give a shout out to, getting emails as well from him. So I appreciate it, man. Yago Manny. Let's go, man. That's what I'm talking about. Like, the education is there. Okay. Matt Maley is the person that you want to literally tie yourself to, right? Why? Because retail, unfortunately, always gets the short end of the stick. Okay. This is not a hypothesis. This is not a thought, right? This is what happens, right? So I saw some of the comments there that somebody was down, like, I think it was 100 grand and then lost. And then lost their other 200 grand on Neo. Guys, before you jump into the market with that kind of cash, you have to have some sort of guidance. And I'm not talking about fake Twitter account Reddit guidance. I'm talking about real educated financial advice. Being a chief market strategist, talking to a retail trader, those two things, they don't mix. That's like mango and rice. Those things never go together. However, Benzinga, since we are so passionate about bringing you guys the education for trading, that's why we were able to bring, Matt from the heavens up there on Wall Street, so that he can help retail traders really find their rhythm. And on top of that, trade with the smart money, right? You've heard that, follow the smart money, chief market strategist, private equity firm, 40 years in the game, every 2 weeks on CNBC and Bloomberg. That is what I call smart money. So you got to respect, obviously, 40 years, a career. You really can't get that from, any sort of material. You have to live through that, living through all of the corrections, living through all of that data processing. Literally, Matt was doing this before there were even computers, I think. So this is somebody that has been around before, this all became a lot more technological. But do you guys have any questions? Right? I'm just here to stay for a little bit longer to see if you guys have any questions on the chat room. It is a 24/7 chat room. There's people there we have people from all over the world. So it's really like the conversation doesn't really stop. So if that's a question you guys have, just want to make sure I cover everything. And it is 7 days a week. You post your tickers there, your strategies, whatever it is that you really want to get a feel from, right? From Matt. If you want to filter your trades through Matt, you can do that. You just, you ask him a simple question. He responds like within like a couple, really quickly. Obviously, being a chief market strategist, like I said, is not a walk in the park, but you have access to him every day in the chat room. And I'm seeing him whip out trades on a daily basis. Okay, AJ, I got your question. And I'll see in the YouTube chat if there's any questions there as well. Noah, I agree with you. I would not take advice from people on Twitter, just from verified people that have done it, like, that have the actual proof to show that they've been around in the game. They've been successful enough to go through not just Solomon Brothers, one of the biggest trading firms on Wall Street, hottest ones on 80s and 90s, but then going on to Merrill Lynch as well, and a chief market strategist today. So that speaks volumes, right? That speaks dedication, that speaks passion, that speaks knowledge on Matt's behalf. And, that's how it is. So AJ, how many average trade ideas per day in the chat room? So you're going to see somewhere like, from a couple to 5, sometimes, that's not even including all of the tickers that everybody else is asking Matt Maley about. And Matt Maley provides an educated financial response, right, of how they would trade it. And it's not really just the ticker, right? It's the education behind the ticker. It's really like, okay, but why am I buying this, right? Why should I short it instead of going long? What am I not seeing? Because as a retail trader, it's very easy to not see things, because the trained eye really is, the one that can really identify those things. The untrained eye is not able to identify all of the alerts, if you want to call them that. So yeah, you'll have picks from Matt. He'll give you picks on sectors as well. You got to understand, Matt Maley's not only looking at US equities, he's looking at bond prices, he's looking at yields, he's looking at Bitcoin, he's looking at oil, he's looking at the dollar, he's looking at other currencies, he's looking at international news, chip shortage. Chip shortage is not from the US. Chip shortage is all the way from Asia, like news from there. So you got to understand that Matt has a full team of analysts, full team of researchers who is basically like handing him over like information in a golden plate that was requested for prior. Whenever this happens, let's make sure that we can take action. You want to follow smart money? Well, you gotta follow, a private equity firm. You gotta follow a chief market strategist, right? I don't know who you think you're gonna follow, Albert Einstein. This is the definition of smart money, really, that what you need to be doing as a retail trader.
I said this before, Rodrigo. For people who don't know, like Google images Matt Maley, and you'll see his face on TV screen caps of CNBC and Bloomberg. So
all the time,
these huge networks are literally calling Matt when they have no idea what's happening in the markets, or when they want insights on the stock pick. And not only that, like Matt, he actually drafts a report every week that gets sent out to institutions, institutional traders.
Equity firm research.
So he's providing institutional level reports, and that is the kind of information that you're going to get tapped into. So, personally, I always say like Matt's a hack to the markets. That's how I see him. Whenever I'm trying to understand anything in the markets, first place I go is, okay, what's Matt saying about it? What's
going on in Matt's chat room? Yeah, we all do that here. I think they already know. Let's get to the questions here.
So a couple of questions here. So there's, is Matt every day on the chat room, and what are the hours of the chat room? Rodrigo,
yes.
Want to answer those?
Yes, absolutely. Okay, so Matt is every day on the chat room. He's literally every single day there. He's always throwing out picks, updates on the markets, which is kind of what I was like talking about. He's going to talk to you about sectors as well, so that you understand really the rotation, the market rotation that is happening, and you understand these relationships. There's more to trading than just hitting a buy and hitting a sell button. Understanding the relationship with all of the market participants is really what's going to give you the understanding, and not just buy for buy, but know what you're doing. So yes, he is every day there in the chat room. As Matt, what are the hours on the chat room? 24/7. Like I said, there's people all over the world that are signed up to Matt Maley. He's on Bloomberg. Bloomberg's international. They're even putting out their broadcast on Jupiter. So everybody is in the chat room. Everybody's whipping trades. Everybody's talking about strategies, helping each other. It's a wonderful community. It's a great place for learning. It's a great place for even people that have been trading 40 years, 30 years. I know people that are even in, in other, places of finance that they join Matt Maley's chat room because it's so knowledgeable. You see how hard he goes, just this little sneak peek he gave you, but yes, in the chat room, he goes all out. And keep asking questions, guys. Keep giving me the questions. I want to make sure that every question is answered. I want to make sure that nobody here is, leaves with a doubt or a question. That's what I'm here
the other thing
for.
that I'll add, Rodrigo, is we had a question way earlier in the session.
Yeah.
It's not just, we did a whole bunch of tickers and he did an analysis on the tickers. That's not everything that Matt does. He also provides lots of options trades, a lot of calls and puts. And if you're part of this first tier 1, tier 2, or tier 3, he'll suggest certain stocks to trade. In the actual chat room, he'll find option strategies to trade around that stock to maximize your profit. So if you are interested in options trading, then that's another piece of the puzzle that you'll get.
So yeah, and that's really like the main thing is stocks, right? He doesn't, like, Matt obviously doesn't, he's not really like whipping out option trades every day. However, we profit from volatility. The best way to profit from volatility is with leverage, because these are quick trades like the Viacom trade. So yes, there are some big winners in basic calls, basic puts, nothing advanced, nothing out of that. Really, that's what you have to do though, if you do want to be a 4x4 complete trader. You can't be a bull 100% of the time. Matt said it himself. That's what happened in the 90s. That's the bubble. That's why so many equity firms went bust, because they all kept buying. People weren't really looking at it on the short side. So now you have a more balanced market, you could say. But yes, like, you have to be able to profit from bull markets, bear markets, choppy markets, Fed-driven markets, interest rate-driven markets, headline-driven markets, COVID-driven markets. It doesn't matter what's going on, because there's always going to be a pocket of strength. Money is always moving from one place to the other. That's what the stock market is. It's the biggest transfer of wealth in history, right? So, and it usually goes from retail to big money. Why do you say, like, why does that happen? It's very simple, because when we don't have, like, I guess, the right mentorship, the right guidance, it's very easy for us as retail traders to fall back on our emotions. And pretty much what that means is that you're going to buy when the stock is going up, right? And then you're going to sell it when it's going down. And you're just going to be an emotional trader, which is like what you don't want to be. You want to leave emotions out of the equation. Now, how do you do that? You need to have preparation. You need to be prepared for a correction every time. You never know what's going to happen. You need to be prepared for a bull run. You need to be prepared for all these things. But if you don't really have, I guess, the formulation, the processing of how to take the best advantage of this, you're not going to benefit as much from it. Let's just say, like, this chat room is something that we launched here a couple of months ago, and it's been great. People love it. But imagine if you would have been on the chat room, if we would have had the chat room and you'd be on the chat room on April 2020. How much do you think you would have been able to make out of Matt's picks, either shorting the market or going long on other things? So this is really the value of this, right? Not only that, but if you are stuck, let's say in a bad trade, for example, really getting an educated advice, right? Not just somebody who's bullish to the moon, but getting real advice from somebody who's been doing this for 40 years. So this is really the best thing that a retail trader could use, because it will show you how smart money trades, how they process it. Matt Maley, he's a great teacher. As you can see, he has that teacher mentality, even if he's coming from Wall Street. So, Kay, do you have a tryout for a small amount? We do have a 14-day money back guarantee. So, for any reason, you guys can try it out, pick Matt's brain. Ultimately, most people, they end up staying because, they're banking on it, right? So that's why
if anyone here wants to try it, they're unsure, like, email Rodrigo, give Rodrigo a call. He'll find a way to work with you to get you in there to trial. Again, the 14-day refund period, you're not losing anything at all. And a lot of people end up making money in their first week or two, and that pays for the subscription
Especially
for a
right
month
now,
time.
Harvey, especially now because there's so many fears. And look, I'm not trying to spread anything, but like, we're not going to go up forever. Okay. And we need to be real about that. Like stocks do go down sometimes and you want to profit from that, right? You don't want to just sit there and hold the bag. So yeah, this is an amazing time. 2 weeks from now, who knows what can happen, but your account will definitely thank you and your wallet will too. All right, let's see if we have any other questions here. If you guys have any other questions, I'm putting my contact there on the chat. Let me put it on the YouTube thing as well.
And
But yeah,
this is Rodrigo's personal line. So when you dial that number, it's not going to go to like an automated robot that asks for your security number. It goes right to Rodrigo. You'll hear Rodrigo's voice as soon as you dial that number. So
yeah, I
give
will
him a
be
call. If
calling
you're on the
guys for
fence,
sure.
give him a call and talk with him, and he'll tell you exactly what you need to know about. Asmat, the hours, I think we talked about it. It's 24/7. The chat's always open.
24/7. Imagine having access to a chief market strategist 24/7. Imagine having access to like equity research picks on a 24/7 chat room, like with the actual chief market strategist. Like, I mean, for really what you're paying here. Look, I've walked into an equity firm and I've asked them, hey, can you help me get some picks? They call security on me and I'm out, right? This is really like the relation. Like you really can't just go up into like a big equity firm and just say, I want to talk to the chief market strategist and I want to get picks right now. So the fact that you guys have this, that we're able to bring this to you, it's a privilege if you ask me, because there's a lot of retail traders that just live on and they trade and they vacuum trade all day, and they have CNBC on every single day and they're just buying what they're pumping, and then they're holding the bag and they're like, oh, why am I doing, what am I doing wrong? Well, it's very simple. You need to trade alongside a community. You need to be with a community that actually is, with the same, it has the same goal that you do, right? So we all follow Matt's advice. Matt is always giving amazing picks. This is literally the one I used to trade. I trade from the tier 3. That's one of my favorite ones, of course, but the chat room is really where I get the most out of it, because you have a direct line of communication with him. So Asma, he can't be available 24/7 himself. Yeah, nobody can, right? People got to sleep, they got a family. But as we are trading, we are there available. Matt is whipping out trades and he's always answering everybody, every single body. And every time I go in there, it's like somebody saying like, oh, I just made this much on this on this trade. But more recently, I just been looking at there because of the market behavior. Matt's opinion is very highly regarded, not just here within Benzinga, but also within Wall Street, within financial media. So as a retail trader, having that access, it really is a great thing. I wish I had this when I started, but it's really something you do want to do, especially if you're new. Even if you're advanced, like it doesn't matter if you've been trading 20 years on retail, like you really will not know what equity firms go through and the kind of research and things they do, especially from somebody doing it for 40 years. So I've learned so much from that. I really can't even it's hard for you to put it in 1 hour here, but this is a sneak peek, right? This is what we're doing in the chat room all day.
Even
So
from the session, like the amount of information that I've learned just from the session itself is amazing. So just imagine having that every single day during market hours, and getting commentary literally on the stocks that you're interested in. So it's huge. There's another question here. Could you please go over how Matt's program works? Is it just buy here, here, and sell here?
okay. Yeah. Okay, KH, great question. Awesome question. And I love the fact that you're participating. Everybody else should do that as well. Participate, ask questions. We want to know what your questions are. And look, we might be saving you a lot from blowing up your account here. So yeah, could definitely worth for the 14-day money back guarantee. So KH, how does the program work? So basically in the chat room, it's a live chat room. It's a live trading chat room. It's an educational chat room. Matt Maley's there all day, obviously, closer to the trading hours. And basically he's whipping out trades that and these are not just pickers that he's just finding, here and there. This is researched picks. This is an actual strategy that you're following. This is an actual trade that is coming from an equity firm that has done their research, their diligence, have been waiting for the right time to take action, and you are getting that delivered to you in a live chat room every day. So I don't know really where else you could find that. I mean, unless you're, but the goal, the purpose of this really is to be able to help retail traders have access to, I guess, better trades, right? As retail traders, we're really just gambling, right? Because you don't know everything that equity firms know. You might be looking at a higher high, higher low, and you're probably thinking like, wow, like this is the best time to get in. And then there's just a hedge fund just waiting and waiting. And then suddenly he dumps 30 mil shares and drops it and shorts it to the ground. And your charts don't mean anything anymore. So being prepared for this, being prepared to take action on these kinds of things, nothing's guaranteed in the market. So don't think that because a chart looks good, it's going to keep looking good. Usually when it looks too good, that's usually the end of it. So very, very important, guys, that you prepare yourselves as traders. If the correction doesn't happen and we keep making money in the chat room, doesn't matter. If the market goes up or down, we're still banking in the chat room. The truth of the matter is that you actually have to be prepared for it, right? Everybody wants to make money on the trades. Everybody, right? Everybody wants to win, right? But nobody wants to prepare to win. That's the problem. Nobody wants to prepare for these other scenarios that can happen, right? Nobody wants to prepare and do really deep due diligence, and they just want to buy things when they go up and sell them when they go down. And that strategy doesn't work. I've tried it. Trust me. Like, this is really where retail needs to draw the line and say, I want to learn how to trade like equity firms trade. You look at the papers. It's very simple. 90% of retail traders, get wiped out of the market in the first year. Okay. There's a reason why retail is always holding the bag. There's a reason why equity firms just keep making more money, right? It's because they have set strategies, trading models. They do really deep research. Like you saw Matt, he was showing you his Bloomberg terminal. That's like $5,000 a month. Okay. That's like $5,000 a month. And the kind of research you see there, you can do a lot of research. I know people that have it and they've shown it to me, and it's pretty advanced. And that is where Matt does his research. So you are going to be able to get all the benefits of a Bloomberg terminal that he's using, right? And also all the research from the equity firm, all the research from Matt Maley that he's doing, the analysts, the researchers, literally they're doing the homework for you. And it's good to learn, right? But you got to start the right way, right? So there's education in this, there's winning picks in this, there's lifelong mentorship with this. Matt would be the guy that I would want to get this from, just because he's already been through it. He's been through every single correction, even before we had computers. Okay. Before we had computers, Matt Maley was there hustling out there on Wall Street. And that really tells you that, somebody knows what they're doing, right? If you usually want to work with someone or hire a plumber, let's say, right? You want somebody who's been doing it for a long time, right? They've seen what happens. They know how to prepare. They have a plan B. They have a plan C. They have a plan D, right? They can make profits on any type of market, right? So it doesn't make sense for you to just keep buying and not preparing if a correction were to happen, or at least knowing, right? At least knowing that if this happens in any stock that I'm in, because maybe you guys aren't trading some volatile stocks and you need to be prepared, if there is a drop in that, right? You can't just really think they go on forever. And, that's a mistake equity firms did in the 90s, and retail seems like they keep doing it. So this is what we're here for. We're here to give you guys educated trades. We're here to give you education with Matt Maley, who's basically giving you everything from the research firm there. So avoid the bubble trading, avoid the vacuum trading. That's something that everybody in retail is going to fall to at one point. I mean, can't blame you, right? You see the stock going up. Like you're just like, oh, let me go all in here, right? It's going to keep going up. You start getting a little greedy. You get that little feeling of butterflies, and then it starts going down, and then you start getting another feeling in your stomach. So it's all about making informed financial decisions. You need to make them for yourself. Otherwise, somebody else will do them for you. But I highly encourage you guys to join this community of educated traders, investors that follow Matt Maley. Obviously, there's a lot that, there's a lot in the chat room. I can't go over everything because I'll never finish, but we go over so many things there: strategies, dollar, relationship to, Bitcoin and GDP and all this stuff. And Definitely, this is something that I think every retail trader should read up on. Like I said, there's more to trading than buying and selling. You need to look at this as an adult. You need to understand that there are other participants in the market, not just in the US, but internationally, that will impact US equities. And as a retail trader, the more you know, the more prepared you are, right? So this is back to what I was saying. You need to prepare yourself to win. You need to prepare yourself to make money in the market. By preparing, I mean you need to know how these things interact with each other, right? You need to you say we don't plan to fail. We fail to plan. You've ever heard that? That's literally what happens to most traders, right? So having a plan is the most important thing that you could do as a trader. Now, how good is your plan if you're just coming out of Robinhood and it's your first day trading? I don't know. Maybe it would be a good idea to ask a chief market strategist who's been doing it for 40 years. That's what I think, right? Maybe this would be the best thing for a lot of you guys that are new to really give it a try because, like I said, retail, what, 9 out of 10 times is blown up, right? So it's time that we start doing things differently. We start actually looking at trading from a different perspective. We don't want to be holding the bag anymore as retail traders. So I can tell you from experience, I've learned a lot from Matt Maley. I've learned a lot from these workshops that we do here, especially from the chat room. He's always there answering every question. Sometimes I don't even ask, like, I mean, I'm not even asking questions in the chat room, but I see the questions that people are asking and I see what they're talking about. And it's like, oh, wow. And look, I'm learning and I'm not, some people do that. Some people just, look at what people are talking about, Matt's answers. And if you throw a trade there and like literally Matt will tell you exactly how he would approach it, but not just that. He's going to tell you about the sector. He's going to tell you about the PE ratios. He's going to compare it to the competitors. He's going to give you a full chart and everything. So it's definitely a more tailored approach, something you don't see often, but definitely Matt Maley is the king of that. Definitely being able to read the market. I've never seen anybody that is so accurate, calling the tops, calling bottoms. And it's really hard to do that. Nobody can really call the exact top or the exact bottom, but you need to be preparing yourself. In the chat room, like I said, we were already talking about a correction. We were already talking about a dip in the market. We were dropping for 5-6 days straight, and we had like a sympathy bounce today. I'm not buying it. So being prepared for when what hits the fan. That's what it comes down to. That's what Matt Maley not brings to the table. But also when things are not hitting the hitting the fan, you actually know how to take advantage of bull markets the best way. Like I remember he was bullish on commodities like 2 years ago when nobody was even talking about it. Tickers like X, US Steel, things like what, $25, and Matt was talking about it when it was a single digit under $5. So looking years ahead, right? Not just thinking about, we're not like day trading, flipping or things like that. We're really looking for like short swings, also good long investments. And that's really what you want to hear from Matt, right? You want to get trades that have been researched, that have gone through his filter. So that's been my experience with it. I know if you guys join, you're going to have a great time. And I just want to take a quick moment here because we did get a couple of new people here, and you know how we do it here in Benzinga. So just want to say welcome to the family, to all these new members here. Jogish, Maurice, Jennifer, Aston, Harun, welcome to the family, guys. Let's go. Glad to see that you guys are taking the education seriously, because that's what we're about here. Okay. We're not about lotto tickets, but here and there, right? They will come, but it's not like you're looking for them every day, right? With that risk comes the reward, but that's not something that we're doing every day, right? We're looking for consistency. That's the name of the game, right? You can be great at whatever you do, but if you don't apply consistency to that, it doesn't matter, right? If you're only good on Tuesdays, that's not good. You need to be good Monday, Tuesday, Wednesday, Thursday, Friday, all week and weekend, right? So that's what we're doing in the chat room. We have a dedicated community of international traders and investors that are on the same boat. We're all trying to beat the market, and Matt is the leader of the boat, and he's literally helping us with all this. So definitely a big shout out to Matt Maley for doing all this. And, he's a busy man, and being able to help you guys with this is really good. It's really cool. So let me know if you guys have any other, Rudy, buy high, sell low. Yeah, that's my strategy. If you do, you guys have any other questions? Let me know. If I should be here for a little longer, tell me. You tell me. I know I got a lot of emails from you guys. KH, Frank, Ibrahim, James, a lot of you guys there. So I'll be getting in touch with you in a few minutes. Just want to see if there's any other questions here that you guys would like me to answer, or anything else that I can help you guys with. You know, that's what I'm here for. And I want to make sure that, you know, no question leaves unanswered. No trader gets left behind. That's our motto. It's going to be our motto for sure. You'll see it somewhere. So let me know. I'll stay here for a couple more minutes here. I'm just going to throw in my contact before I do head out. I don't want to leave all these people waiting because they already seem pretty excited to join, and I don't blame them. All right, I'm going to drop this here one time, guys, and let me know. Rudy, 79 watching, 66 likes. That looks pretty good. It looks pretty good. Good stuff, people. Okay, and just know that this 70% off is only for today. It's only, and it expires at midnight. So don't get mad at me if I can't hook it up tomorrow, because, you know, like upper management is definitely, you know, on my neck about it. So we got to make sure that if you guys want to sign up with the 70% off, you have to do it before midnight. Okay. Now, if you email me and you know, we get the ball rolling, whatever, that's different. Right. So yeah, just want to let you guys know. And thank you everybody for being here. I think it's really important that you take your education seriously, because if you don't, nobody else will. Right. This is the one thing that you can't, like, somebody can do your home. So you can pay someone to do your homework in like high school and all that stuff. But like, when it comes to trading, I mean, you kind of want to listen to the people that have been doing it and are successful at it. So enjoy the chat room while you have it at 70% off, and the laptop. If you guys have any questions, you have my contact information there. If you want to reach me, we can talk about this. No problem. I'll be here working for a couple more hours here. Just want to make sure that everybody can get in while we do have the 70% off. And thank you everybody for joining. Appreciate you guys taking the time to join us here with Matt Maley, with Harvey, and myself. We definitely put a lot of work into bringing you guys these workshops, these educational workshops. That's what they are, because we do care about your long-term trading success. That's our motto at, you know, Benzinga. We're retail traders, and our goal is to help retail traders across the board, across borders, you know, because it is an international community. So very fun, very exciting. And just want to say a last thank you here. So thank you very much, guys, for joining. We're going to be ending the stream here. So just feel free to reach out if you have any questions or like to, you know, hear more about Matt Maley. Thank you very much, guys, and have a great day.